Or are we Gucci or not? Or not? Should be. Should be, y'all. Should be. Boom, 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 boom. Last but not least. Good enough. We got the levels, the levels. I mean, in terms of getting caught up, when we talked about like the blue box, right? You could have taken this thing, but kind of like as we discussed, probably gonna get ran over more often than not. So can we get a shout to the yellow lines, right? Can we get a shout to the yellow line? My God. Yeah, in terms of the short that we've been talking about, pixel perfect, right? If you're taking an entry on this poor eye, you would have got in basically at the top tick. Also, just SFP'd it, right? Lots of ways you could have taken this. Could have cut out the limit here, could have taken the SFP, could have taken the failed auction, could have taken the pull retest of this. Lots of ways you could have taken that short. Hello.
Slow cruise. High stakes. Fam only know outsiders. Marcos.
877.1.
Numbers on the screen stack clean, now we double that quick. Money in the air, still cool, we don't flex for the pigs. Every play lined up, locked in, whole fam too slick. Low key wins, but the price tag's loud. Penthouse view when we move through town.
2.
Hands to the coupe, top down, only real ones here, whole gang get crowned. Bids in the zone, we don't chase that hype, let the crowd run wild, we just snipe on sight. Profits on tap, every day feel right, from the block to the charts, now it's first class flights. We trade with the gang, move silent, but they loud when they hit. Numbers on the screen stack clean, now we double that quick. Double. Money in the air, still cool, we don't flex for the pigs. Every play lined up, locked in, whole fam too slick. Eyes on the prize, my shade stay dark. Cut through the noise like a blade through bark. Whole gang sharp, every move leave marks. Money stretched long like we pulling up arcs. Whoever move sloppy, play stay crisp. One wrong step, then you off the list. Trading game cold, but we built for this. And the fam gon' eat every time we hit. We trade with the gang, move silent, but they loud when they hit. Numbers on the screen stack clean, now we double that quick. Money in the air, still cool, we don't flex for the pigs. Every play lined up, locked in, whole fam too slick.
Boom. Let's look at everything else.
Pixel perfect, click that zone. Trade his sweet like a tone. Tap my line and flew, we gone. is key. Chart hit perfect like it read my mind. Set that level, waited time. Execution surgical, vibe divine. Screenshots looking borderline sign. Late night setup, candles glow. Price come flirt and steal the show. Hit my line, then gone like poof. Sharp like art, that's Marco's proof. Pixel perfect, click that zone. Trade hit sweet like a tone. Tap my line and flew, we gone. Profit chart looking full blown. Line so sharp, they slice right on cue. No dice, map so
What is this?
precise. Entry lock, that's nice. Lock. It's not luck, it's legacy. Snipe so smooth you think it's cheap. Golden zone, exact degree. Pixel perfect, entry suite. Pixel perfect, entry suite. Pixel perfect, entry suite. Pixel perfect, entry suite. Pixel perfect all day long. Trading look like my theme song. Screenshots glow like neon. Hit that mark and we move on. Line so sharp, they sight. Precision wins, it's life. Sipping tea with you so nice. Chart hit clean, that's life.
Interesting.
Yeah. Mac. Stats. Data. Woo. Marcos. The math is the math. I don't do
Not here, out of my ear.
black. I draw it
I think we're officially going deaf. Feels bad.
Step into the blessings. You chase green dreams.
Feels bad.
Stats on deck, static clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene. Draw that fib, let price extend. Third touch hit, you wanna send. You went long, I fade that in. One click, now I press that send. Out of my face like a Chinese wick. I don't blink, I don't flip quick. Your chart loud, my math stick. I don't pray, I just pick. G5 jet for the weekend swing. Script on lock, let the algo sing. Exotic pack is the GSC. Roll up loud while I press TP. The math is the math.
Yeah, I think we're all caught up.
Lambo mad black. I draw it presses. Girl Scout smoke. Chart God blesses. You chase green dreams. I chase addresses. Stats on deck, stat clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene. I got numbers, they got nerves. They hold by us, I observe. I sit pressure in ocean curves. While your trade wreck, I just swerve. Line so light, it still got hit. Wick tapped in and made that flip. I don't need 5 monitors lit. One clear edge and I'm rich. Girl on deck with the Cuban frame. Top flow view and the charts insane. She said, how you that calm with gains? I said, math don't feel no pain. Stats. Drawn. Tag. TP. Gone. Bad. Secure. The math is the math. The math.
Guys.
The math. I don't do guesses. Lambo mad black. I draw it presses. Girl Scout smoke. Chart God blesses. You chase green dreams. I chase addresses. Stats on deck, static clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene.
You thought it was luck. It was math. Again.
There's something I wanted to watch. There was that wedge guy. Where is it?
Marcos trades. Yeah, we see you.
Where'd this wedge clown go? Oh yeah, here we go.
Things work for me.
Longest cry when the chart go drop, drop. We in profit while they beg it to stop, stop. Pop champagne 'cause we short that top. Dancing in the club while they watch ass flop. Longest cry when the chart go drop, drop. We cash out, then we spin non-stop. Moon dreams fade when the bears gon' pop. Laughing
Where is this thing?
Is when a market bottoms out, not always, but typically there's some sort of capitulation of some sorts, where things really stretch down from the moving averages. I call that a reversal extension. And from the reversal extension, you get a snap back to the moving averages. Often you kind of pull back again. It might look like a bear flag that you might think is going to break again. But really, it's just this entire period here is a period of high volatility. And then right in this zone, after you touch the moving average, pull back, you know, you're tightening up and you're decreasing volatility. And this is generally for me where you kind of get that, you know, pivot to then get long the market or get long stock. And essentially it's building a higher low here. You're seeing a snapback off capitulation, a decline in volatility, tightening of the price structure, and then, you know, building a higher low. And then when you push through that zone, I call that the wedge pop. Typically you are moving through the moving averages, but technically.
Wait, is this like a clip from the other thing? Wasn't this guy wearing the same shit? Am I just on drugs?
Like the buy area, which I think a lot of people misinterpret.
And so typically you want to try to do your buying around the wedge pop, which is the ideal buy area.
The price structure that is
swing high.
Yes, you want a tight area. You want, you know, what I call a mini base, and that's really the key. I was ready for it through, I think it was through 260. Loaded up on it, and we just had this massive expansion. And I really liked the quarterly, or still do, on this thing. So I was just, you know, it got really, really extended. And I'd done this in coin a couple times the last like year and a half, where I was just committed to holding it back to the moving averages. But you know, that's the trade, right? So you've got this huge volume, these bull snorts that kind of alert it to you, then it consolidates down into the 20-day. It sets up this pivot here, and when it goes, you get long and you ride the moving averages. Do what works best for you from a time frame perspective. And then I just think, you know, it takes time to like catch a real trend. So it's like, you know, you kind of have to be patient, one, on your entries for the right spots, and then two, to let the trades play out. You're never really going to have a big winner if you can't be patient.
All right, welcome everybody. It's my pleasure to introduce the next presenter of the Traderline Conference, Oliver Kell. He's the U.S. investing champion of 2020 and record holder. He's someone I've learned an immense amount of trading from, and really looking forward to today's presentation. We'll talk about kind of his overall system, going from the cycle price action into executing a lot of his recent trades, using those as case studies. Oliver, thanks so much for joining us again, and looking forward to this. Thanks for having us.
Sure. Thanks, Richard. So this is basically, you know, I'm just going to go over like the root of my strategy, kind of how I think about the market. And I think it can be like a baseline for anybody to learn to swing trade who, you know, is more of a trend follower, moving average type trader, to then, you know, build other pieces around that fit their style. So kind of the root of my, what, you know, at least what I call it, is the cycle of price action. But it's just, you know, an objective overlay to keep you on the correct side of the market. So basically I use the 10 and the 20 period moving average, and a green light environment for long trades is when you're above the moving averages, and a red light environment is when you're below the moving averages. You know, you can short or just, you know, go to cash on that stock. And then you want to adjust your market exposure and aggressiveness just kind of based on where we are in the cycle, which I'll go more into that here. So basically, you know, the red moving average for me is the 10 period exponential moving average. The blue is the 20 period exponential moving average. You know, people use the simple period moving averages. You know, from my perspective, it doesn't really matter much. I just, you know, kind of randomly started using the EMA after using SMAs for a long time. And that's why I use it pretty much. But basically the way things work for me is when a market bottoms out, not always, but typically there's some sort of capitulation of some sorts, where things really stretch down from the moving averages. I call that a reversal extension. And from the reversal extension, you get a snap back to the moving averages. Often you kind of pull back again. It might look like a bear flag that you might think is going to break again, but really it's just this entire period here is a period of high volatility. And then right in this zone, after you touch the moving average, pull back, you're tightening up and you're decreasing volatility. And this is generally for me where you kind of get that, pivot to then get long the market or get long stock. And essentially it's building a higher low here. So you're seeing a snapback off capitulation, a decline in volatility, tightening of the price structure.
Is it just me or is this literally a clip in the other video? It's just me.
And so typically weekly and the daily band higher. That's how the stock is first. So I can kind of get a bigger position weekly in the day. Attention to the downside. So that's really
and then building a higher low. And then when you push through that zone, I call that the wedge pop. Typically you are moving through the moving averages, but technically that's not like the buy area, which I think a lot of people misinterpret. It's breaking through the price structure that is
The swing high.
Yes, you want a tight area. You want what I call a mini base, and that's really the key. Then from there, the first pullback into the moving averages, or really the next higher low, is what I call the EMA crossback. Essentially, you've crossed the EMAs and you're checking back into them, and that's another nice low risk area to get long the market or pick up a stock that's hopefully near the beginning of its move. These are my favorite areas to get involved in the market: the wedge pop and then the crossback. Then from there, if you move higher, you'll get what I call a basin break. It's just like a consolidation. It's nothing more than that. It's a consolidation back into the moving averages, usually in the range of maybe like 1 to 3 weeks. So this isn't like a full new base or anything like that. And then if you move up and in a really strong market, you might get like 2 basin breaks. Sometimes you only get 1. Sometimes in a really, really strong market, you get 3. And then from there, you typically get some sort of acceleration, euphoria, and you get what I call an exhaustion extension, which is essentially the opposite of a reversal extension. The reversal extension is created by fear. The exhaustion extension is created by greed and euphoria. People chasing the market, things are ripping, they want to be involved. And really, you bottom out when there's no one left to sell, and you top out when there's no one left to buy. So typically you'll get a hard flush back down into the moving averages. If you have a true exhaustion extension, and I'll go over here, you'll come back to the moving average. It'll kind of typically find some support. Some people will think it's just another, check back to the moving average, and it'll start to turn back up. But then you typically get a lower high, and you flush the moving averages and have more of what I call a wedge drop.
On the board, Fortune
so
500 company.
Set, kind of like a base structure, like.
Not really, no. I'm never giving any thought. It depends what I'd be doing.
On the wedge pop, but sometimes it's a little shorter and then just kind of drops. I would recommend going back through hundreds of charts and just see if you can see this for yourself. And then you get the cross back, the basin break, and you do it all over again. So the key is, in my opinion, is to marry up the weekly with the daily.
On the board today.
So this is fractal. It'll work on
Congratulations.
The daily, the 65-minute, or the hourly. Whatever time frame you want to trade. Naturally, lower time frames are going to have more whipsaws and false moves. Higher time frames,
seems like an interesting opportunity.
For my strategy, we want to try to be involved in situations where the weekly is in an uptrend. So let's say right here you get a weekly wedge pop. This right here will be a daily upcycle. And then this might be, a daily correction, but it's all within a weekly upcycle. And then another daily upcycle and another daily upcycle. So this all here would be taking place inside of this move on the weekly. And then let's say you lose the daily moving averages right here. It's typically just like a check back into the 10 or 20 week, and then it resets again. So I kind of trade the daily time frame inside of the weekly cycle. And if you can pair both of those up, that's going to be your best chance for success, just because you've got time frame alignment. Does that make sense, Richard?
Yeah, I think that's really well explained. And I know extensions on the weekly, especially when they marry up with extensions on the daily, that's when you get more cautious and are watching for those wedge drops and potentially end of the trade, end of that upcycle.
Yeah, exactly. So like the further you get into the weekly trend.
This is the guy that was talking about the extended moving averages, right? On both the daily and the weekly. I recall. Let's just go back and read our notes. Pretty sure it was this guy. Yeah, it was. Okay. I don't remember. Don't worry, I do. I recall. I recall perfectly.
The weekly, and you're really extended from the 10 week, and then you also get extended from the 10 day on the daily time frame.
You just mentioned it
You know, you
now.
really want to maybe be ready to take profits.
Yeah.
Yeah. Okay. So implementing the strategy, and I kind of just said this, but the higher time frame is the weekly or the monthly chart. So I do look at both. The weekly is definitely the one I more regularly use, but I check in on the monthly. And is what I try to ask myself when I'm looking at the weekly, you know, how extended is my stock? Are we breaking out of a large multi-month base? That's obviously the best scenario. You know, the old saying, the bigger in base, the higher in space. So we want to try to find stocks that are not extended on the weekly. Something that I started using more regularly is actually the 5-week moving average is pretty much the 20-day exponential moving average. And it's best if you can get long as close as possible to that. You know, when you're playing that daily upcycle. You know, and then a 5 to 8 week pullback or consolidation into the 10 or 20 week EMA. These are the best scenarios. You know, obviously you can have, you know, 1 to 2 weeks of chop within a daily upcycle, but typically once that daily breaks and you're coming back into the weekly moving averages, you're going to want a little bit more of a basing pattern just so the market can kind of reset, you know, chop some people up, build a new foundation, and then it'll have a chance to follow through. And then for me, I typically do not trade stocks below the 20-week EMA. You know, there's some exceptions, but I would say not many. You know, if there are some exceptions, it's rare. So if something's living consistently below the 20-week EMA, there's just better stocks to trade. There's stronger stocks out there, and there's just really no reason to pay attention to things below the 20-week, in my opinion. All right, then the trade management time frame. For me, that's the daily combined with the 65-minute chart. So I analyze and manage each trade around the daily bars and the moving averages. You know, like when I'm scanning at night, I'm mostly looking at the weekly and the daily. And I'm looking to buy strength back through the daily 10-20 EMA. So kind of that wedge.
Oh, this guy
scenario,
uses
if I can
pivots
find
as
mini
well.
days
Interesting.
and buy back through those moving averages. And then I watch the price structure of higher highs and higher lows on the 65-minute time frame. You know, so sometimes if I miss a perfect breakout, I can let it kind of pull back and look for that next higher low on the 65-minute time frame and get on board the trade. And then it just kind of helps me the more I've been doing it, emotionally understanding like, hey, this may look like a big pullback, but it's really just coming back into a higher low. And I think if you can frame the mindset that, you know, markets typically don't top until they have a lower high and they don't bottom until they have a higher low, it can kind of help you ride the trend more easily. Obviously, there's exceptions to that. There's things like news, or if a market just gets totally extended, you know, the bottom kind of fall out of it. But typically, that's a good rule to have to kind of allow you to stick with your names. And then you've got the execution kind of risk management time frame. You know, I say the 30-minute or the 10 or 15-minute is what I do is I take the daily moving averages for the 5, 10, and 20 EMA, so that the daily time period, and I will put it on a lower time frame chart. The reason I like to use the actual daily moving averages, even though I'm looking at the shorter time frame, is because like I'm a swing trader, right? So I am actually, you know, managing my trade on the daily. So therefore, I don't want to be buying based off, you know, the 30-minute, 10-period moving average, because it might work for that day, but then it has a natural pullback and I get taken out of it because I was buying too extended from a daily moving average. So I try to do everything I'm doing based on the actual daily moving averages. And so typically I will set alerts right around the daily 10 or 20 period exponential moving average. I'll try to buy pullbacks to those moving averages, you know, in scenarios like the EMA crossback, or after a few weeks of basing, I might get started in a base and break off the moving averages and then add on follow through. I will put alerts at the previous days, weeks, highs and lows, to look for something I call a break and recapture, where maybe it takes out that previous day, week's high or low, and it also lines up with the daily 10 or 20 period moving average, and then it can retake that. I think the key though is to not create any trades on the lower time frame. So if you sit and look at the 10 or 15, even 30-minute time period, you'll find trades during the day, and maybe they work that day, but if they're not really backed by a weekly or daily time frame, they're not really meant to be held overnight. Because you just don't want to look for trades on
I
the
don't know
lower
if I
time
agree with
frames.
that,
You want to
right?
let the weekly and
I don't know if
daily.
I agree with that per se. Because like, we've been trading this price action, and look how many days this is. And this is a 30-minute. This is like two weeks of price action just here alone. Like you have context of what's happening on the higher time frame. You have to make sure to just not get too focused in on like this kind of little garbage, right? Keep in mind what's really going on. Whatever, fair enough, fair enough. Each to their own. No difference really.
Kind of drive what you're doing. So those are really the three time frames. And for me, more and more, I'm trying to get away from like the 10-minute. Like I used to look at the 5-minute. I don't look at it at all anymore. And I think one of the big misconceptions is you take less risk on the 5-minute, which like technically you do, but if you get stopped out like 5 times because your stop's too tight, like maybe you're better off just like trading on the 65-minute and letting it play out. But to each their own. I think the key is the weekly, the daily, and then whatever
True.
time frame you're comfortable with to execute on. Okay, so the advantages is it's reasonably objective. Like obviously there's some with more experience you see different things in charts via volume, things like that. But overall you're either above or below the moving averages. It's that simple. And like I said, it's fractal. So you can go look at the monthly, the weekly, the daily, the 65-minute, whatever time frame you're comfortable trading on, and you can implement this strategy. So for example, let's say you're a little more shorter term. Maybe you like to use the daily, the 65-minute, and like the 10-minute, and you're not looking to hold back to the daily moving average. You're looking to use like the hourly moving averages or something like that. You can fit this kind of multi time frame price cycle approach to whatever time frame you're comfortable trading with. And then price is the number one indicator. So the cycle provides a framework to analyze price essentially. And then you're always buying strength. You're just adjusting your time frame to get there. So for example, if you have a pullback on the weekly, right? Things are correcting, multi-week pullback on the weekly. You're then looking to buy strength on the daily, once the daily time frame starts to bottom out. Or let's say you're looking to buy an EMA crossback and on the daily time frame, something's pulling back to the moving averages. You're then going down and you're looking at your 65-minute and you're looking to buy strength on the 65-minute. So even when I'm buying a pullback, I'm looking to buy strength. I'm not just looking to like step in and get run over if it doesn't hold where I think it's going to hold. And then I think this is kind of an advantage. Some people think the 10 and the 20 period moving average are quote unquote faster moving averages, and therefore they can't keep you in a big winner. So my personality is like I'm not going to hold back to the 50 period moving average. I'm going to hold and then probably sell right into the 50. Based on previous experiences. So I find that the best stocks typically hold the 10 or the 20 period moving average. And if a stock can't hold that moving average, I could probably find something better that's going to move a little bit faster. I typically want to
It's pretty
trade.
delayed, yeah. Good 10 on here. No, we do not. Makes sense.
Not typically. I want to trade high beta stocks that move quickly. And if something is the type of name that, doesn't consistently hold the 10 or 20 period moving average, maybe it's just not the best type of stock for me to trade, and that's fine. And then you want to try to spot relative strength by buying stocks that are ahead of the indexes in the cycle. So not always, but for example, let's say the indexes have a reversal extension on the lows, and you can find stocks that are already above their moving averages and the volatility is already contracted and they're kind of ready to go. They'll probably move out in that time period where the indexes are between the reversal extension and the wedge pop. So the indexes could be real choppy and volatile there, which can make it a little bit tough. But those best names will often push out in that time period or around the time period of the index wedge pop. So if you can find stocks that are already set up, haven't pulled back and corrected as much as the market during the correction, they're already making higher lows as the index is kind of capitulating out. Those are the types of names that you want to be involved in because they should outperform once the market turns. And then this is a key thing that I think as you get more experience trading, you develop more patience. But because the cycle gives you multiple opportunities to get long stocks, there's no excuse to ever chase. If you miss the wedge pop, you can wait for the cross back. There's just so many opportunities out there. And I think the more you kind of embrace that, the better off you're going to be. Because the key is, to get involved at a good price so that when you get stopped out, you're stopped out because you're wrong. It's not just some random, 5-minute chart that looked good one afternoon. So disadvantages, there's whipsaw potential in that we're using faster moving averages. I personally like to trade stocks that are going to hold the 10 or 20 period moving average. And if they're not, I would rather find a different stock. So sure, there is whipsaw potential, but I just think that the best stocks are high beta stocks that typically hold the 10-20 period moving average for my strategy. And trend following in nature. So in a range bound market, you've got potential for false signals, or you might have a bunch of small winners or situations where you get up, 5, 6, 7%, and then you end up, taking a scratch trade or like a 1 or 2% winner. And maybe you just don't make too much progress. But that's just kind of the
thing about it, just skimming through those charts now. Like ideally, there's like a bit of an effective way to quantify this. Because there were some of those charts lost the 20 moving average, but like the 50 just kept going and going and going. But then some of them like were just riding the 20, like obviously they were ripping the whole time. And you also get out earlier when you're using that. How do we go about doing that? Probably have to take into account some kind of like daily or weekly volatility, right? On average. Or perhaps it's just best to do the way he's doing it for him, right? Like, already tried out the other ways, there's no difference.
Part of the process and until you get that next major trend. And then discretionary execution. So this can be viewed as a major advantage. I think kind of once you put in the work, it does certainly leave the door open for emotional mistakes, or obviously if you have incorrect analysis. Kind of the way that I kind of think about it is, my system creates, a 90% mechanical overlay, to my discretionary input. So, I'm picking the stocks I'm trading. I am, assessing the areas to get in and out, etc. But a lot of the time, kind of once my trade is on, the system is in ways kind of managing it. And more, the longer I've run this system, I just don't really get that emotional with it anymore. Just because I've gone through the best winners bar by bar, and I've kind of seen they'll ride these moving averages during their runs. And I just kind of embrace that, and it allows me to kind of stay with stocks. I would say for me, Sometimes I'll sell an extension that maybe isn't an extension, but usually I'm good enough where it might pull back for a day or two, and I realize my mistake, and I can just get back on board. But yeah, I guess discretionary execution could be viewed as a disadvantage. Okay, so trend price structure. So like in the past, I think people have been so focused on the moving averages when it comes to my strategy. You know, they think a stock just like crosses the moving average, it's a buy or whatnot. But is what gets overlooked is the price structure, which is actually what's important. So if you look at this kind of model, so let's just say over here on the left, the bottom left, we had a reversal extension, we had a sell off, and we came back up and we built a higher low, and then we contracted, right? There's no moving averages here or anything. It's just like volatility, contraction, and then we take out this pivot and we have an up move. So we have an expansion higher. An expansion higher meaning we really make a statement move up, right? And then we pull back or we contract, meaning that the pullback is smaller than the expansion, right? That's basically, in my eyes, what trend is it's expansion followed by tight trade and contraction, and you trend up, and then at some point you expand a little too far. And that doesn't mean the market's going to sell off, but it means, okay, rather than just a pullback, we may need a little bit more of a consolidation, you know, maybe a multi-week consolidation. That is essentially like your basin break. It's like, hey, we've had a good move. We're still strong. We still want to go higher, but, you know, we need a timeout. We need a water break, right? And then once we kind of, you know, refuel, then we're going to, you know, start the expansion phase again and get going. And that's basically what price structure is. So like here would be like your wedge pop. This would be your cross back, and you're moving. Then you tighten up. You need a little more chop. This is your basin break. And then at some point you go up and you pull back. And at this point, it just looks like the rest of this. But then you make a lower high. And like, you know, maybe this so far is just a pullback to a moving average. But at some point, you start to really like break trend, right? And so to me, that would be like right here. And then you kind of tighten and you really confirm and follow through down. And so basically we've had higher highs and higher lows. Now we have lower highs. It's kind of like, oh, you know, maybe I want to be aware in case something happens. Oh, maybe it puts a higher low in here and goes higher, no problem. But in this case, it goes lower. And now the trends move back lower, and that's fine. You just need to assess that. Here's probably your wedge pop, blah, 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 lower highs, lower lows. And then at some point, we get that higher low again. We start to contract. And then when we kind of get through here, it's like, here's the wedge pop again, the cross back, and the cycle plays out again. So it's really important to pay attention to the actual trend, higher highs and higher lows. But the real key is, you know, the tightness. You know, you want to find those mini bases, those tight areas. One, because like everybody says, that's how you manage risk, and it is. But it's also to get a real expansion in a stock, it's typically going to come out of a contraction. You know, even if you're just talking a 65-minute chart where it's like a huge morning expansion, and then it consolidates in the afternoon, consolidates the next day for like a day and a half, and then maybe it's ready to move again. You'll see that same thing on all time frames. So you want to find tight areas. Like that's really the key in my eyes. Any questions on that?
No, I think that was really clear. I just really like what you said earlier when you were talking about this. Is
Yeah, that's
stocks
true.
don't
This
really
guy,
bottom
this
until
guy
there's a
said
higher
shit for
low,
like a
and they
fucking
don't really
20
pop
minutes.
until there's a lower high. I think that's a really simple way to put it. But I think this is a really good diagram to explain it, explain the cycle, and you'll be able to study this if you go back and study bases. You know, I think Nvidia is really good at studying the cycle, Tesla as well, and just the cues recently. You can study this recent correction, see the reversal extension down,
Yep.
the higher low that forms, all of that. It happens in all markets and all time frames. It's going to be a little bit different and rhyme a little bit different each time, but it's a great framework to interpret and know when you want to get involved in a trend and be in the right general area on that first wedge pop or the first EMA crossback.
So like, you know, some basic notes, like trade the strongest stocks in the in-play themes. Like if you're trading weak stocks, you're going to have a harder time than if you're trading the leading names, you know, the strongest stocks that are liquid. Like I like liquid stocks. I think they hold their structure better. And then the in-play themes. So like right now, I think crypto is like a pretty in-play theme. Like if you're trading crypto, you're probably going to have a little bit more luck or, you know, success than if you're trading, you know, oil stocks that have been like pretty choppy and a little bit out of favor.
Was this
You know,
reported?
so relative strength and the proper groups will make it all easier. And then
Doesn't
embrace
say.
that concept of expansion and contraction. You know, if something really expands, like it's gonna have to chop around a little to refuel for the next move. So you know, if you want to be a swing trader, at least on my time frame, you do have to be willing to kind of let stocks rest. You know, stocks go up and they rest, and then they go up again, and then sometimes they get too overheated, and that might be the end of the move. But you got to embrace that expansion and contraction concept. And then sometimes it takes a few times to get a trade right. I'll show you near the end here one of my biggest trades ever. I think I got, you know, stopped out for, I think, like 2 scratches twice before I was able to get it right. And then this is a basic system to wrap your own tips and tricks around. So I learned a lot from a lot of different people, and, you know, I took what worked for me. I trial and error with a bunch of different things, and I kept what worked for me, and I got rid of what didn't. And I would suggest that you do the same, and then fit this strategy to your personality. So I know people who kind of have adopted this approach to the market, and, you know, maybe they like to just take their profits and kind of reset rather than hold through the pullbacks, and that's totally fine. Maybe you hold for the entire trend. This kind of same system can be implemented in many different ways, because it's basically just a root trading system, you know, that many people have used for a long time. So, you know, make it your own. Okay, so here's a couple trades. I'm actually still in this. So this was a situation where we had a wedge pop over here on the left, and then
It was a while
it kind
ago,
of
right?
chopped around into the crossback. It had earnings, and then I had actually been long it on this wedge pop, and I actually, like, I want to say this was the earnings day, and I
So this is recorded like in the summer, basically. That makes sense. Makes sense given what he said.
actually sold it, which proved to be a mistake. But then I got back long it in here and in here and in here and here. I bought it like 4 straight days in a row, and I've just been, you know, riding this stock this whole way. So, you know, got long in here, and it's just moved up. In hindsight, I wish I had added more in here. I didn't. And then I actually, right in here, I made the mistake. I thought this was an extension.
Yeah, the thing
and
about
I
all
sold.
these kinds of traders is that the thing that sucks about it is like if you want to do this right now, you can't, right? That's why I find it so funny when people are so like against having like a bear market. You're never gonna get trades like that if we don't get one. Like every single chart has just gone fucking like basically parabolic at this point. There is no fucking capitulation base to be getting in on, right? Too late, too fucking late. Like these are potentials to like have breakouts, right? But upside gets more and more capped the more we go up. God damn. God damn.
Into it, and then, you know, the next day I wasn't working, and it went up, and when I was doing my work, I was like, oh, I really blew this trade, because this was my favorite position. And then they didn't get in the S&P 500, and it pulled back, and I was able to pick it back up literally lower. It bailed me out of my mistake, and I've just been holding this whole time. I thought in this zone we may be potentially putting in an extension. We had all this volume, but it was able to just kind of consolidate and continue to trend higher. So at this point, because this trend started in late April, so this trend has been going on for, you know, about 2.5, 3 months. And you can see how we've consistently held the 10-period moving average this whole time. You know, the book Trade Like an O'Neill Disciple, he's got a rule where, you know, once it holds the 10-day for like 8 weeks, you know, that becomes the moving average you're going to use to sell. So I don't adopt their rule entirely. Typically, when a moving average holds 3 or 4 times, so you can see 1, 2, and then kind of right here is 3, then I'll say, okay, which moving average should it set up into, the 10-day or the 20-day? And I'll use that. So I've been using the 20 days default the majority of this run, and only recently am I switching to the 10-day. And that's how I'm going to manage my exit on this, either an obvious kind of blow off, or if it breaks the 10-day. So this is just like a closer look at the entry. So I was already long. I got out like literally like right here on earnings. Not the best. And then I started getting back long. I started getting back long on this break and recapture. I added a little. You can see this little spot here. I added. And so this just gives you a sense of like this base that's built here on the 65-minute time frame. These are all my daily moving averages. So this red is the 10-day, this is the 20-day, and it's allowing me to kind of set my position into the moving averages. And you know, you could say like, oh, why'd you sell on the earnings day? It was above the 10-day. And I mean, you would be right. It's because I made a mistake. But overall, I'm looking to build positions in bases like this into these moving averages. And the nice thing about a situation like this is I was able to get long some here, then it had this flag, so I got long some more here and then more there. If I can buy 3 or 4 times in the base, it allows me to get a bigger position, where if I'm buying here and then here, I'm raising my stop to here. If I'm adding here, I'm probably raising my stop to up here. And then this is probably just to kind of top it off, I'm probably raising my stop up to like here. That's how I'm able to get a bigger position. So I actually prefer when stocks they make progress, but they take kind of 2 or 3 days to get going, which is also why I prefer to get started in by the moving average versus just buy this breakout up here, because that allows me to, you know, build a bigger position, which is important for me. And then this just shows the 65-minute for the whole trend. So, you know, you can kind of see that base there. And so talking about expansion, tight contraction, right? And even though this is a gap up, this is expansion, tight contraction, expansion. Okay, it needs to pull back a little. And the way that I don't like worry about these types of moves is I view the 10 and the 20 period moving average as kind of my filters for my higher highs and higher lows. So incorrectly would be to say like, hey, it went up and it based, this is the higher low, went up and it based, this is the higher low, this is the higher low, I get stopped out. For me, it's like, this is all just an up move and we haven't even determined the higher low because, you know, we're too far from the 10-day. Even this here is debatable to be a higher low. Now up here, when you kind of build this more of a shelf, you come back into the 10-day, you know, this could be an area to get long, right? And we break out of this little descending channel on the 10-day. Now to me, this is like a new higher low, right? And so this is your contraction, you expand again, and then, you know, you contract again and you expand, tight trade, expand.
Curious if he adds
you kind of
any of these
reset
points
again.
or not. Doesn't seem like it.
So that's just the concept of expansion and contraction. It's really just trend, and you want to trade in the directions of the expansions. You know, once you start to see the down moves bigger than the up moves, you know, it's probably a sign that the trend is starting to change. Okay, so another name that I am currently long, I got long Uber. Uber's a name that I have been long and not made any money in. Coin. So I
How is Uber these days? Interesting. We have that on here, yeah.
Remember this news, you know, I tried getting long this in here and it just never really got going. But then right here, it kind of made a statement, you know, at the time, this is more volume. If you look at how light the volume had been, and I initially put a little on into this back test of the 20 EMA, just very small. And then I can't remember why this thing ripped, but it did. And I was ready for it through, I think it was through 260, and, you know, loaded up on it. And we just had this massive expansion. And I really liked the quarterly, or still do, on this thing. So I was just, you know, it got really, really extended. And I'd done this in coin a couple times the last like year and a half, where I was just committed to holding it back to the moving averages. On this day, I actually thought I made a mistake. I was like, oh, crap. But, you know, I stuck with it. And I almost feel like I got lucky here. It just kind of came back. And, you know, it's just kind of riding the 10-day moving average up. And, you know, we'll see how far it goes. But, you know, that's a trade, right? So you've got this huge volume, these bull snorts that kind of alert it to you, then it consolidates down into the 20-day. It sets up this pivot here. And when it goes, you get long and you ride the moving averages. And, you know, that's all I'm doing right now. And so you can kind of see on the 65-minute here. So like, you know, this might have been an area you tried and it just kind of didn't work, or, you know, you might have stayed with it because it didn't really lose that support area. But for me, kind of when it's just lollygagging around in here, I might get out and just reset on something. If I took it here, just because. But then here it had wedge pop back through the moving average. It came down and set on the 20-day here, and then this is a pretty clear base that was built through all this consolidation, and this 260, 261ish area was the buy area. And then you see the huge up move, then you see the tightening, huge up move, and then it kind of needs to pull back more. But our filters, our 10-day, just kind of keeps you going, and we'll see when it ends. I don't know, but that's just like an example of how I use the daily and in the 65. I'm pretty much mostly looking at those two time frames during the day. This is another trade I'm currently in right now. This is SMR. So I did really, really well in SMR and Oklo on the previous push up. And so I got long a little SMR in here that I got stopped out of. And then I started paying attention to it more. I was watching this 3750 level here, and kind of when it reversed, I got out of it because I wasn't sure if it was going to keep going lower. But it undercut here. It made a higher low here, and I started watching it again. And I got long here and here, and I also got long Oklo. And then I added a little more, or actually a good amount more, through this high when it followed through. And then today it got a little extended. So I think this is an area you could have taken some off. I actually just stuck with mine, but I'm expecting it to kind of chop around, maybe even wash out a little, who knows. But you can see this contraction in the volatility here. And it's coming down in the 20-day. It's real wide and loose, and then it really, really tightens up here. And I don't know why I have all these arrows here. I'm sorry. But it basically moved up here, pulled back, and then did what I call reconfirmed, and then it followed through.
Is that where you said he bought?
And the way I kind of think about this here is it's pretty extended, clearly, and I mean this is to me a short-term exhaustion, but I view it as having consolidated that pretty well. So my mindset is like, hey, if this just keeps going, if this just keeps going higher tomorrow, great. But I would be going into tomorrow expecting it to maybe pull back, consolidate, because we're so far from the 10-day or the 20-day. So I'm willing to just kind of let it chop around. I have no expectation here. Whereas what I was saying, someone else with more of a lower time frame, not a lower time frame, just their strategy might be to sell those extensions. They might have checked out of this thing into this rip, and they'll be just the way that I'm willing to just kind of hold, let them move it out. They might just be waiting to get back on board it, like over here, and that's fine too. And then lastly, I wanted to show without any moving average. This is a trade I took in coin. I want to say maybe the end of 2024 or beginning of, maybe it was the end of 2023 actually, beginning of 2024. You can just see. So this is coin. This orange moving average is just like the 200-day for this time frame. It's irrelevant. So don't pay attention to it. But essentially, we have a structural break right here, right? We come up and we hold again. And then what do? We move higher and we build another little base here, and we break out of it and we contract and we move up. And like I have these higher lows drawn all here, but it's basically, we move up, here's the higher low, we move up again, here's another higher low, new basing pattern, we expand, contract again. And then essentially, once we break this pattern of higher lows, if you could see the daily here, this was getting pretty extended from the 10-day. So I'd already taken a little bit off. And then I obviously gave back some off the top here for sure. But then was stopped out. And then what do we see? It came up and it rejected it here. And what happened? Here's a big expansion down, contraction, expansion down, contraction, expansion down. So the stock changed a little bit. And I can't remember what happened here after this, but I don't know if it went back up or not. I think it consolidated for a while. But it just goes to show you don't necessarily need the moving averages as long as you understand basing, tight areas, and can properly assess the higher lows. I like the 10 or the 20-day because it's a reference guide. Kind of how I called it that filter. It's like if something's pretty far from the 10-day, I'm not going to count that high or low because I'm very likely to just get shaken out of it on a natural consolidation back into the 10-day, right? And So that I just wanted to show that. So, focus on the price structure. Like I feel like from previous talks, everybody's so focused on the moving averages when you don't have tight trade. You're like, you just don't have much. Um, and then this was an example. This was one of my biggest trades ever. But really, it was a lot of kind of just my example where here, I'll just go through this. So we had a higher low here. So this green line's the 50-day. Here's my 10-20 day. And we were kind of tightening the space. I got long in here. It went up, it contracted, it kind of back tested this breakout. I added a little more and it went up. And then I got stopped out in this zone. And I basically like didn't really make any money, maybe made a little. And then I was ready to get going again. I probably would have bought through here and it kind of washed out the next day. And so this is definitely what I was ready for, and it just didn't happen. So, do you kind of like leave the stock? No, like, you kind of always pay attention to your best names. Your Nvidias, your Teslas, lately your Palantir, your Hood, etc. You just kind of always keep them on your radar, because then what ended up happening is this thing tightened up again, and I was able to get long on this break back through here. I was able to add in here, and then I was able to like load the boat on this move, add, and like this thing ended up doubling in like 2 or 3 months or something. But oftentimes, that's how kind of trading is for me. Is I get going, I'm pumped. Like when it's Nvidia, I'm like, okay, this thing's about to hold here, and just like keep trending higher, and then you get stopped out. And then you're like, all right, man, that sucked. Like I'm back to square one again. Here we go. And then you find your next spot, and you just kind of like never know when the trade's going to work. You never know how well it's going to work. You just try to put yourself in position to, be successful. And that's really it. Like I think it's important people realize like most of your trades are going to be losers. Probably like 60 to 70% of them.
Speak for yourself.
But you just got to keep trying to find good spots.
Speak for your
where your
fucking
risk
self.
is tight, where maybe you have a small winner, like this first one's a small winner. I kind of consider it a scratch. Some of them are going to be losers, obviously, for sure, where so hopefully not too big, but it's going to happen. And then you get the trade that kind of pays for all the scratches, all the frustration, gets taken care of in one trade. So that's pretty much it. Richard, I don't know if you have any questions.
Yeah. First of all, thank you so much for running through all that. It's worth pointing out as well. This is the
Mouths off. I haven't
textbook
lost a
NVIDIA
trade
case
yet.
that everybody should go and study. And
Yeah, exactly.
before the latest entry in your trades, Oliver, it was also showing RS to the market, right? It was forming higher lows as the market was forming lower lows, I believe, during that period.
I believe. And also, like, the key with this was the same as that Hood trade. I was able to buy this like
Multiple times.
three times. And then on this day, this was also a breakout of a huge weekly base. And the volume, like literally the first 5 minutes, it was on. And you kind of just have to know when to go for it in those situations. But so, yeah, it's just another example. Like I like to buy, down in these areas, because then maybe I get 2 or 3 chances to get more size on where I can raise my stop. That's like a key for me personally.
Yeah. And I know NVIDIA is super liquid. You like to go a little bit bigger in those ones. How much are you kind of putting on of your account or of the final position that you want at each of those spots when they develop as it approaches, the weekly pivot?
Interesting question.
Signals natural breakout.
Sure. So like typically, I kind of position size what I call, like my top names that are like very liquid, and typically like the biggest
talked about this
I will
last
go is
time?
like 30 to 35%. And then kind of like my, liquid core, but it's just not like a top 2 or 3 name for me. It's like a 15 to 20%. And then if I'm trading stuff that's like a little more volatile, something like that SMR, for example, that I showed earlier, typically those, like if it's a cheaper stock, the max I'll usually go is like 7%. And then if it's kind of like a volatile name that is more high priced, I might go like 12%. But I put a lot of my money in my top 2 or 3 ideas. Like I like trading stuff like Nvidia, Palantir, Hood, that is like really, really liquid. I find it holds its price structure better, but that is also, high beta. So like, for example, when I first started traded a lot of Apple, Baidu, Amazon, they were the high flyers. And now I rarely trade them at all. And eventually Nvidia, it's already getting like that. Eventually Nvidia will be a boring stock. Like it just will. It's like just kind of how it goes. And there will be other stuff to trade. Yeah.
Yeah, and then could you go back to the hood one from the very beginning, that chart here? Because I think it'd be good to point out for people maybe, what you classify as the EMA cross bag versus the basin break on that daily chart. It was one of the first ones that you showed. Sorry to
Yeah.
make you go all the way back there.
Mhm.
Yeah.
So,
So yeah, this
okay.
one. Yes.
So I wish I had the whole chart on here, but I think technically like in here was the wedge pop, this kind of gap up here. Um, and then this was setting into the moving averages here. So this little mini base was technically a crossback. This was also affected in that, maybe this would have gone here, but then it had earnings. So it's kind of waiting for earnings, in my opinion. And then kind of once it had that out of the way, it did what I think it would have just done right here if it didn't have earnings.
And so point out the basin breaks maybe for folks as well.
Yeah, okay. So this is the crossback. Then we go up, and this is like a basin break, or I would consider it a basin break because it's a little over a week. But this is more of a kind of true basin break. But really they're the same thing. Basin break is just like a 1 to 3 week kind of consolidation back into the moving averages, and we move up, and then we chop again, and we
Expand
move up,
higher.
and
Yep.
here's another one. So like from my perspective on hood, this has happened essentially. We've had 1, 2, 3. We've had like 4 little mini bases, which is a lot. I would love it, like absolutely love it, if this thing accelerated here, because I think I would have a lot of confidence selling into that if it happened. And I'm going to do better if I can sell into a blow off than if I get stopped out losing a moving average. I sort of thought that was happening
True.
here, and I think if it had
True.
got another day or two, I would have sold into it, but then it kind of just chopped around. So that's another thing. Like you don't want the market or the stock to get like too far ahead of itself, right? It's good when stocks consolidate, and like it can be tough to hold through these consolidations. But like another name, like fortunately Hood has doubled, right? But another name that I was in for most of this run that I got stopped out of like a week ago was Crowd, and I was in it this whole time, and it had like these consolidations, and I sat through it all, and in the end, it only really moved like 20 to 25%, which is, I mean, solid gain, but I'd rather be in like the hood, right? So sometimes it can stink to sit in these consolidations because you never know, like, oh, is this gonna be the end, or okay, no, we just got another big expansion where we moved another 25% in like 5 days. So yeah, I don't know what I was saying there really, but
No, that's exactly what I was looking for. And then
Like,
stocks
how
like
often do you really see that though? Realistically, I wonder if we will these type of videos when we're in a bear market. I mean, that's when you're getting ready to take these trades like that. Interesting.
obviously is critical, especially with the themes. And like you said recently, the one that's really caught fire has been the crypto. There was kind of a period where it was kind of pausing, and then with coin and IBIT and Bitcoin itself pushing
Yeah.
recently, that's been
Well, it's like it works
what
the
do you
other
do
way,
to-
right? Like this kind of like the whole chart he had up here at the start, like it's like a two-way cycle. Like you're doing the inverse the other way.
stay on top of what themes are working, and know when to focus on a theme, what signs you're looking for that money's flowing in as stuff is setting up, so you're ready to execute when that theme really takes fire.
Sure. So, I mean, one, it's like the charts in some ways are going to lead you to the themes. What has nice bases, And then I do, maybe use a little bit of what I consider to be common sense. So really, is what part of the reason I was so into Hood actually wasn't crypto at all. I know of an older gentleman who, I haven't talked to him in a long time, but I consider him to be one of the better traders I've ever known. He does a lot of archaic stuff with options, spreads, all types of stuff. And my buddy told me that this guy was moving a bunch of his money to Hood, and I said, oh, like, some of it is more like long term stuff, DCA, because I've actually never used Hood. And he was like, no, he loves trading options on there. And so in my head, I was like, oh, I thought this was like a straight up retail app, like my brothers are on it and stuff. And then, I hear this guy who is very sophisticated, really loves it. And it was kind of like, whoa. And then all this crypto stuff started happening where they added all the crypto money or whatever they're doing.
I think, I mean, I don't have Robinhood myself. Or I think I do, but I've never like actually used it. But I think they offer some pretty like interesting what's it called? Like if you transfer your thing over, they will give you like a percentage of how much you transferred as like a payment essentially. I think Coinbase does something similar. Yeah, Robinhood and Coinbase are no joke. They have a lot of customers, a lot. Like more than like a lot of these like big banks. Like the customers may not have as much money as some of like the investors that are with like Goldman Sachs or JP Morgan, for example. But like in terms of just raw number of users, they have way more. And as like boomers start dying off and money starts getting transferred down, they're gonna start to have to be managing a lot of money.
But for me, really, like by the time all that started happening, kind of the trend was underway, and I was just kind of
Robinhood.
It was just like a positive for me. But like crypto has been a pretty clear theme in that just like the Bitcoin, the base that it's had has been a clean, nice base. It kind of moved up and then it built like a nice handle, and obviously it's pushed out of it. So I feel like that's kind of an obvious one. Obviously like the main driving theme of the whole market really is AI. I mean, there's themes within themes with AI. And at the beginning of it, I think NVIDIA is kind of the infrastructure piece to AI. And then you have essentially the computers are Amazon, Google, Oracle, like they've got the huge data centers and stuff. Those are essentially huge computers that they're plugging the NVIDIA infrastructure into. So it was like NVIDIA to me was like a no-brainer. And then kind of step two to me of the AI play was like the applicators, like who's going to take this data and scrub it, which for me was a no-brainer, like Palantir. And then like I kind of thought there was potential for Snow to do well, like Snow Databricks. But Snow to me is just such a crappy stock that I never really like. I haven't traded it this whole run. And I guess it's done well, but I don't. It obviously hasn't done as well as Palantir. But so now like kind of what's the next step? And I was actually talking to this guy today, who lives in Silicon Valley, and I think like cost compression. People spend so much money scrubbing their data with things like Snowflake and Databricks. How can they cut down that cost? And I think that's maybe an area to look at. And I had not thought about that until I talked to him today. But cybersecurity, like to me, has been a multi-year theme. Like everything's moving online, and you got to protect your stuff. Robots and things like that are obviously a theme. And I sort of think there's like to me at least, and keep in mind I haven't made any money in these stocks personally because I'm not fully into them, but like something like quantum to me, I'm not so sure that it's a real thing based on my reading, but it's been an in-theme play that has paid fat huge for people. And basically, if you just paid attention to that group, saw when those bases set up, that theme was then in play. It's like probably in play again right now. And it's been driven kind of by the charts. But so it's basically for me, like the core themes are AI. Okay, what's within AI? Like I kind of just went through, like you got your infrastructure, you got your data, and then
Energy too. Yeah,
energy,
with Gev. Yeah.
the power play for sure. And then for me, even within power, you had like your big traditional power, the kegs, the VSTs, and whatever. And then to me, the little more bit of a specky, but something that I really believe in is these small modular reactors. I think that's like the major growth play, which is why I've been paying attention to Oklo and SMR. And then you've got crypto, and then and then you've got like your sector themes. Like I think like if you look tonight, maybe we're seeing a little bit of money rotating to retail and stuff like that. To me, you want to try to find like that game-changing company in retail or the game-changing company like in medical devices versus like the whole theme. There's usually like a company with a killer product that there's a reason why that one does so much better than the other ones. So it's kind of like theme, and then you want to focus on the specific company.
Yeah, and then I know big moves on big volume that will
Yeah.
catch your eye, and that helps point to what the themes are working and where the money's going.
Yeah, I mean, like huge volume is going to tell you where the money's going, and if you see enormous volume in a lot of stocks that are kind of playing in the same space, that should kind of
Be a clue.
pay attention to that, I guess. And then major themes, they typically they last more than like 2 to 3 months. Obviously, sometimes these institutions take 6 to 12 months to buy their positions, and they're looking to hold them for 5 to 10 years. So typically, if you can find the core themes, you can ride them over and over until they're played out. So you don't really have to reinvent the wheel like every 2 or 3 months.
Yeah, perfect. Oliver, this has been fantastic. I think this is a great overview of your process and a great starting point for people to build their own foundations. Any last words of advice for traders starting out, or advice specifically about incorporating your cycle into a system, or how you trade personally?
I would just say, yeah, you have to like take, you could take this system and adjust it. Maybe you like to hold stuff for like 5 or 6 days. Like, great, buy it at 48 and sell it at 60, and then buy it again at 65 and sell it at 80 or whatever. So, do what works best for you from a time frame perspective. And then I just think, it takes time to like catch a real trend. So it's like, you kind of have to be patient. One, on your entries for the right spots, and then 2, to let the trades play out. You're never really going to have a big winner if you can't be patient.
Yeah, I think that's a good golden nugget to end it with. So Oliver, thanks again for your time. To everyone watching, hope you guys enjoyed as well. Leave a like down below if you did. And Oliver, where would you point people to if they want to learn more?
Interesting. What's going on over here? God damn, gold's really going.
She moves for numbers, golden entry. Marcos. Yeah. She arched like the fib retrace. Golden pocket, I find that place. Her body math, no room for waste. I trade slow, she matched that pace. She bounced back like a 0.5 move. EMA touch, she slipped, she groove. Stop loss tight when she let me in. I risk it clean, reward Benson. Eyes on the chart, but she moaned my name. but she come fast when I mark that range. Golden entry, she ride that wave so sensually.
Will reach all-time high again.
Pull me close when she hit TP. Golden
Yeah, seems like it's going, right?
roll her hips like price for me. Golden entry, all this math make her lose belief. Risk of fine, we
Took a while though.
she split that spread in red silk.
2 months.
Candle fake, she break then trap then throw it back like she run that map. She don't beg, she calculates. Her hips don't lie, they oscillate. I press with calm, she activate. Now we both deep in that pivot state. She don't talk, just signal right. She set that level, I click all night. Trade her body with trailing might and close it clean before daylight. Golden entry, she ride that wave so sensually. Golden entry, she pull me close.
Be interesting to see where that money goes after.
Entry, she roll her hips like price for me. Golden entry, all this math make her lose belief. She said don't stop till the chart complete. I said girl this is price technique. No romance, just trend and heat. She said trade me, not treat me sweet. Golden entry, she bounced that move so militantly. Golden entry, she chart my name like symmetry. Golden entry, she wicked that dip then ride for me. Golden entry, I make 'em moan, the math is the key.
Good point. Money won't stay in gold long term. Yeah, that and silver, right? Both pretty large market cap.
Yeah, they try to short the bottom. Back call, baby. We dancing while they margin calling. Let's go. Short the low, that's a no. Watch my profits overflow. We in the club, lights glow. While your account going slow. Marcos get the chart show. Candles green in a row. You press L, I press buy. Now you watching me grow.
Billionaire hedge fund trader said a play of the day. The ratio between the two metals. What is the play of the day?
Every tick up, yeah, I feel that rush. Wallet look fat, can't fit that much. Shoulders get squeezed while we lift that up. Now we laugh from the yard as the beat turns up. Short the low, that's a no. Watch my profits overflow. We in the club, lights glow. While your account going slow. Marcos got
What's the point of saying it then? Yeah, but people watch like the gold to silver ratio and whatnot. People do that for all kinds of assets. Whatever the ratio is, it'll probably reverse back to that. You're looking at it. Ratio right there. Don't mean revert back up. Yeah, probably. The opportunity, silver is cheap, elevated ratio, the ratio. I mean, let's just look at some of this, yeah. Every single time the RSIs reach this purple line, just mark this out. I don't know if you're noticing a pattern. I don't know if you've noticed a pattern here. Long silver now? I don't know about that. Do not know about you missed it. You missed it. Plus that ratio that we just looked at was like at the bottom. That means like silver has been like dominating gold just the past recent move, right? Like perfect top, perfect top, perfect top, perfect top, perfect top. Looks like a top is coming here pretty soon, yeah.
Whole fam up now. Yeah. Lights low, charts glow. Yeah, yeah. Fam good, whole table eating.
Yeah, I wouldn't be buying silver there. If anything, you want to be getting into gold, if anything. The question is this like a sustained rally or not? So ideally, you would have been in from lower, right? I'm sure a lot of people are taking this breakout trade. Yeah, but you don't want to do that when silver is the one leading. The whole point is you have two assets that are like highly correlated and co-integrated. And then when one of them starts to like stray too far away, then you're like shorting this one and longing the other. And they both like mean revert back to the line. Like a lot of people were doing that with what was it called this year? It was in Boeing, right? Boeing had like that whole chaos going on. With all the crashes and whatnot. Isn't gold overvalued and silver overvalued? You told me. You tell me. I mean, just look at them. Crap is confusing, so I never do it. Gold. This is what this is just saying. Gold or silver's outperforming. And just look at like Bitcoin divided by ETH. Not the right chart. BTC. Oh yeah, looking at the inverse. Was a pretty interesting way to do chart analysis, right? I don't know if you guys ever play with an invert. Kind of give the charts a little bit of a flip. So what was that line on? Trippy? Almost like a good way to like not be biased, perhaps. But you do have to account for the fact that like the percentage distances are not the same in both directions. So it's not necessarily exactly the same. What was this on? Oh, so you can just look at them, right? You can just look at these two. Like this has gone up what? 15%. And the time that this has gone up 50. Like quite clear silver is outperforming.
In my pocket, whole trend I own. Each pullback, yeah, that's a step to the throne. Entry so cold, it could chill your phone. Never rush moves, got the patience built in. One green flash and a profit locked in. Squad all sharp, yeah, the circle all win. Math on the board, that's the code we in. We don't miss no play. Slow roll, win, stack racks all day. Move so clean, they just watch, can't say. West Coast cool, while the charts still sway. Trading with the gang, we don't miss no play. Never. Levels hit perfect, watch the candles obey. Marco's in the cut, real calm, no spray. We just count up while the rest gon' pray. Yeah. Marcos trades. Cool moves. Cold math.
Out the gold.
Can't eat together. Always.
Yeah. Whole gang lit. Bags heavy. Marcos, let's ride. We in the charts with the crew that's back. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Deep in the zone, but we still gon' vibe. Trade flow heat where the club get live. Entries crisp, we don't chase that tide. Just wait for the move, then the gang gon' ride. Shorts get squeezed, yeah, we love that pop. Long take flight when the biz don't stop. From the charts to the flow, we connect that drop. Every move locked in, whole squad on top. We in the charts with the crew that's back. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Late night, nights, shots glow, gang tight. Move smart, play right. We gon' win all night. We in the charts with the crew that's back. Stack so tall, yeah, it don't collapse. Lights on us while the beat goes slap. Every trade hit, now the bottles get cracked.
The Go Soon Trading Group. Nice. Very nice. I don't think you're gonna miss a whole lot, to be honest.
Late nights.
Might call it pretty soon. I gotta start packing and whatnot. Well, they're gonna be missing a whole lot. And I'm hungry.
We move risky. Math in the clip, lifestyle 50-50. Yeah. Charts look calm, but the waves still deadly. High stake plays, every entry feel edgy. Cold eyes stare when the numbers turn heavy. Ice on my neck, but the trigger finger ready. Fade the herd, I don't follow no sheep. Yacht life days, but the grind don't sleep. High leverage shots, they gon' feel that heat. Price at my line, that's $1 million a week. We move risky.
Over the last 6 months,
Let it hit me. Clips both ways if they tempt me. Profits and pressures 50-50.
Got a new video.
But it fits me. Long nights turn to the Bentley keys. High stakes, high life, come get with me. Fake consensus, let the market talk slow. Shorts get squeezed while the Lambo top go. Feast on the charts, every candle I know. From the bottom now it's all high floors, no low. Count chips in the penthouse suite. Glass floor view while the city don't sleep. Ops mad 'cause
Can't click on the damn button. Oh, there we go.
lines cut clean through beef. We move risky.
over the last 6 months, you've seen a 40% increase in the FINRA margin loan balances. Where does this exuberance shake out? Clearly, it hasn't helped on the crypto ecosphere. If you look at consensus for 2026, what you can see is that there is an expectation that Mag 7 will slow down slightly, but you will start to see a big acceleration in the everything else. The question for investors is, are those expectations well-founded?
I'm pleased to welcome back to the show Cameron Dawson, CIO of New Edge Wealth. We'll be getting her outlook for 2026, all markets related. Good to see you again, Cameron. Good to see you.
Thank you so much for having me, David.
Yeah, welcome back. Look, we're speaking today on Friday the 19th, and markets are having a great
Is that
day.
an
Good
actual
week,
background
actually,
or just like
after
a
a bit of a
blue
pullback
screen?
on the news
The
that
fuck is that
Oracle
alien?
will no
Like
longer be funded by
astronaut.
Owl Capital, but we'll talk about that in just a minute here. Are we seeing the beginning of a rotation away from tech overall?
Oh boy, well, that certainly has been the case since mid-November. We started seeing a shift in markets where things like healthcare, utilities, a little bit of life out of energy, materials started showing
The finance ETF is like all-time highs today, right? But the thing's starting to go as well. Yeah, like the Russell, like look at this thing today. Quite the move. On my 690 SPY calls gonna pay me tomorrow. Possibly. Maybe, maybe not.
Better relative performance and all of the areas that house the Mag 7 tech, communication services, as well as
This has to be a green screen, right? Like the edge of her thing is like too like, unrealistic.
consumer discretionary, those are the three sectors where the Mag 7 sit, all went into more of a starting to lag camp where you started to see some of the relative performance start to soften. And the question, of course, is can this continue? It's one thing to have a short-term rotation. We've seen plenty of those over the course of the last few years where you have little bursts of outperformance of everything else. If you look at the long-term trend chart of something like the equal weight S&P 500, what you can see is that it's been in a relentless downturn since 2022. But if you look really closely, you can see a couple points of time where you've seen better performance out of the equal weight stocks. And so, as I mentioned, it's a question of can this continue? Does this have legs? And for us, we think the answer to that is really dependent on earnings. We make the observation that the reason that you have seen such powerful earnings growth, powerful outperformance of the Mag 7 over the equal weight is because that's just been where the earnings are. The Mag 7 over the last 3 years has grown earnings by 200%, and that's compared to the equal weight of earnings growth of just 16%. And so if you look at consensus for 2026, what you can see is that there is an expectation that Mag 7 will slow down slightly, but you will start to see a big acceleration in the everything else, where you start to see a big recovery in those average stocks. And I think the question for investors is, are those expectations well-founded? We've constantly seen over the last 3 years, effectively, that the Mag 7 has surprised to the upside, and you've seen surprises to the downside from everything else. So what we're saying is that there's a bit of a high bar for that everything else trade to work. That typically is what we see this time of year. Everybody makes the call of this big hope and
Plus,
dream
like
that we're going to run out.
realistically, like let's just suppose that this bull market continues into next year, and then we do get some like blow off top. Like then what she is describing is exactly what we should be seeing, right? People taking profit out of the leaders, going down the risk curve, and trying to like compound those moves before like leaving the market entirely. Also like a sign of when you start to see the money flowing like that, also like a symptom of like markets ending here pretty soon, right?
But we think that it really has to have a fundamental foundation behind it in order for it to continue. So this could be about positioning and valuation as much as anything else in the short term. And the question is, of course, do you see the earnings kind of back it up to make it have legs? One last quick point on that positioning is that if we go back to the end of October, the kind of effectively blow off top, it was a mini blow off top that we had in some of the Mag 7 and speculative parts of the market. What you saw is that growth traded to an 85% premium to value at that peak in October. It's now fallen to about a 65% premium to value. But what we saw is that 85% level is effectively the peak that we got to at any point over the last 10 years. So the observation is simply to say this is likely a lot to do with valuation and positioning.
She should have put a chart for this. It would have been nice to see like historically that ratio. I don't know if we can find it anywhere ourselves. Seems like a pretty interesting chart, right? I'm gonna just note that down. Pretty interesting data point right there. For sure, I'll probably start to enable end of February, 10 to 15% drawdown, January to March. Possibly. And we've already seen quite the drawdown as is, so I don't know if we're gonna get another one that soon, but possibly. I would love that personally, but we
Question
don't.
of if it continues, it
Oh,
depends
well.
on earnings.
Do you think that the mounting levels of debt that these large tech companies have acquired pose a risk going to 2026?
So I think that we have to make a delineation between those that have seen their debt levels go up, but still have very, very low levels of net debt to EBITDA, for example. So a lot of the hyperscalers. And
$10 pop tomorrow. Knocking some 100 at the end of the week. Yeah, it's possible. We're pretty low volume. The thing is, like, the market's closed on Christmas, right? There's not gonna be many people trading. Christmas Eve, Christmas Day, whatnot. I'm kind of having this week as like a write-off mostly after tomorrow.
and those that have already high levels of debt to EBITDA, but are continuing to add even more debt as you open the show with the talk of what's going on with Oracle and Blue Owl, for example. And so I think the delineation is that if you are a Microsoft or a Google, there's still lots of room for you to be able to continue to spend and increase debt before you probably reach a ceiling where the market is pushing back on you. However, I would say is that Jim Chanos did a great piece back earlier this week or last week where he said, look, a lot of the return on investment for these data center buildouts aren't over what the weighted.
Out of curiosity. What did we close at? I mean, based on all this options data, seems like most people have us sitting 69 to 6,800 the next 3 days until Boxing Day, both on the SPY and the index. If there's like some huge uptick in volume, then yeah, I suppose it's possible. Possible to break through.
Average cost of capital is. So effectively, you have these companies that even though they don't have a lot of debt levels, the incremental return that they're getting from making these investments is not necessarily high enough to justify them making the investments, which is why they're turning to folks like Blue Owl to do some of this off-balance sheet financing. So it doesn't, just because the debt levels aren't high, doesn't mean the market's not going to look very closely to say, is it justified for you to be spending all of this money? There could be some push to say, why don't you just give it back to us, which is what they typically did.
Yeah. And the other counteracting force, I guess, is the fact that the Fed has engaged in what some speculate as QE. They have committed to buying up new reserves in the reserve management program starting as of last week, actually. That in conjunction with lower rates would make this a very easing cycle going into 2026, the first quarter at least. What are your expectations for markets to react to this easing cycle?
Yeah, we were surprised to see that your typical liquidity sensitive parts of the market, your crypto, for example, as being probably one of the most liquidity sensitive areas, not respond as robustly to the announcement that the Fed was going to go down this path. I mean, we see it as a necessary path, as you saw things like SOFR spreads widening out and showing some signs of maybe some short-term funding market stress. And one of the things that we had been watching really closely is this idea that we think about one of the reasons why liquidity has remained so abundant in the market over the past few years, even as the Fed had rates above neutral, even as you were seeing large issuance of treasuries, is because of this observation that a lot of the treasury funding was being done at the short end of the curve and being gobbled up by money market accounts. And we were raising the question of what happens when flows into money markets start to slow. You're seeing short-term rates get cut, so the interest that you earn on money markets is falling in real time, and that, not to say that you were seeing people pull money out of money markets because of that, but the pace of additions is likely to slow just at the time where you see the pace of treasury bill issuance, which needs money markets to gobble those up, is going up. And so this clearly seems to be a function to help solve for part of that problem, as well as some stigma around the discount window, which gets into a whole different conversation. But if we were to just distill it down, then to your point, you have an environment where liquidity, the Fed is signaling that it wants to keep liquidity abundant. That's good. You have an environment where rates do seem at least not biased higher. But I think the challenge that the market is now wrestling with, and this was a great observation that Adam Parker of Trivariate made a couple days ago, where he said, look, if you go back to 2022, the Fed was still hiking rates, but the market at the low in 2022 was effectively making the observation that they were closer to the end of rate cuts than they were to the beginning, meaning that the pace of end of rate hikes, closer to the end of those in the beginning, which just meant that we were closer to the end of the hiking cycle, closer to the beginning of the cutting cycle than we were at other points prior in 2022. So he goes, well, effectively, we're now in the exact opposite. You're closer to the end of the cutting cycle, at least this recalibration cycle where the Fed is cutting, even though the labor market's not falling off a cliff, for example. But that to expect a lot more cuts from here, we're getting closer to neutral. Powell told us that at the December Fed meeting. In fact, he said we're effectively at neutral. So it could be that some of the market's kind of lackluster response to the last Fed cut could have been saying, hey, what was the Winston Churchill? This is not the end. This is not the beginning of the end, but it could be the end of the beginning.
Before we continue with the video, let's talk about today's sponsor, Starfighters. Starfighter Space is an aerospace company operating the world's reduced car planes. Go to the Monday chart and more. So I have here a chart from one of your, or a slide from one of your Monday chart slide deck. So we have, it says here 2 cuts expected in 2026, and then the text accompanying it says this likely reflects doubt that a captured Fed chair, mostly one that is new. The Fed internal machine new to the Fed internal machine would have the political sway to get committee votes for aggressive rate cuts. So given this outlook, then how do you expect the yield curve to perform into 2026? And ultimately, what's your positioning for bonds?
Yeah, I think that's an important point. We were surprised when Kevin Hassett's name was being thrown around, and obviously he was seen as being the most politically captured of the potential Fed nominees, and yet the 10-year yield was below 4%. We're like, where's the term premium? Where's the beef? Like the Wendy's lady, and saying, where's people's concerns that a captured Fed would run policy too easy, cause inflation to be sticky? Where are inflation expectations? And the conclusion was that, well, it's probably because the bond market doesn't believe that the Fed board would coalesce around somebody who was perceived to be an outsider and perceived to be politically captured. Effectively, in an act of defiance, they would not follow whatever the Fed chair wanted to be done. And obviously, there's all this question about the other ways for them to influence the board and put other people on the board, firing people, for example. So maybe that is the reflection that it's not just one person that matters; it's the whole board that matters. Now, one of the things that we had been arguing was effectively that and this is not a point of argument, but just an observation, is that the Fed doesn't control the long end of the curve unless they are expressly trying to control the long end of the curve, meaning that the Fed doesn't control the 10-year or the 30-year. That's much more much more influenced by market-based dynamics, supply and demand dynamics of bonds. When we think about the supply of bonds, of course, that has to do with the Treasury, how many bonds are being issued. Demand has to do with people's inflation expectations, growth expectations, demand for safety, demand for risk. All of that together drives the long end of the curve. And so we have a very simple framework, which is, Fed cut short-term interest rates. What does the 10-year Treasury yield do? And if the context is economic surprises are moving positive, meaning economic data is getting better, the 10-year Treasury yield will go up. If the context is economic data is doing worse and economic surprises are moving negative, then the 10-year Treasury yield will go down. So in order to answer your question about the yield curve, it really depends on the backdrop of economic data. If we see economic data continue to plot along and be in this environment where growth is not stellar, but it's not terrible, then you're in an environment where yields likely remain in this kind of wide choppy range, and you just sort of oscillate around this 420-ish kind of mean, right? Where you go a little bit below it, a little bit above it, but you don't really make much progress. But if you're in an environment where inflation's remaining sticky or reaccelerates, obviously that would be upward pressure on yields. If you're in an environment where you're questioning growth and you have an unemployment rate that goes up to 4.7, 4.8, then that would be an environment where you'd see a big rally in bonds. So it all depends on the context of economic data, not just what the Fed is doing. And that's, of course, the lesson that we learned over the course of the last effectively year and a half of a cutting cycle, where yields are higher after 175 basis points of cuts because the economy has held up.
Yeah, I guess this next point also depends on the context of economic data, not just what the Fed is doing with their rates. But if you just take a look at the last cutting cycle, for example, in 2019, the Fed was cutting into an all-time high at the time for the S&P 500. Ditto 2024, and now we're resuming another cutting cycle. Well, we have already a couple months ago. But the point stands that over the last year and a half, the markets have continued to grind to new all-time highs while the Fed has eased. And so that has, when they've done that in the last two cycles, 2019 and 2024, the markets just grinded higher a year afterward. So can that be a precedent for, can we use that precedent for what's about to happen next year as well?
Well, I would say that, we've been in this cutting cycle since September of 2024. We had a pause in between the deliverance of the first set of cuts and the second set of cuts. So maybe we're living in that year after. Once you start cutting at all-time highs, we're probably living through that now. I'd say that there's an important observation, which is that if you go back to the September through December period of last year as well as this year, there was a really important dynamic that was happening. In both of those times, you had a Fed that was delivering rate cuts, but you had a world that was raising GDP forecasts, meaning that you had consensus expecting better growth than they had prior expected, which meant that there was optimism coming through in some of the data, but the Fed was still delivering cuts. That's an environment where risk assets do really well. Right? I get my liquidity, I get my stimulus, I get my lower rates, but I'm not cutting my growth forecast. That's the perfect environment for risk assets. So the question as we go into 2026 is, okay, if we're closer to the end, we're closer to neutral, and let's just assume that new Fed chair can't define neutral as 1% or 2%, right? Remember, Stephen Miron's dot in the dot plot for 2026 is 2%. He's effectively arguing he thinks the neutral rate is 2 and not 3. 3 is what the long-term neutral dot is on the Fed and the median dot. So let's assume that the neutral rate is 3 based on how far the new Fed chair can push it. That means that then we maybe have 2 more cuts. If you remain in an environment where you're raising growth forecasts, yes, we get your scenario where markets continue to do well. If we're in an environment where we start cutting growth forecasts, then you're in a scenario where I don't think markets do as well. So, it would be nice to be able to draw some kind of prescriptive, this is exactly what's going to happen. But just as the Fed is going to be very data dependent, as they like to say, we cannot ignore the fact that markets will be data dependent as well. Maybe just to actually put a definitive dot on it, we're not making a call for U.S. recession in 2026. We don't think that as of right now, the labor market is falling off a cliff. We reserve every right to change our mind. We are concerned with nonlinearity in labor market data, to quote Neil Dutta, effectively the idea that a little bit of weakness turns into a lot of bit of weakness pretty quickly. But you've been able to be afraid, or you could have been afraid of nonlinearity in labor market data for the last year and a half, and it hasn't proven to be the right fear to have. So certainly a risk we're watching, but not something that we're necessarily making the all-out.
I mean, that's not particularly fair statement, right? Like the last year and a half it was here versus here. So like this is not. You're not going to be as worried of upticks when you're down here versus when you're starting to reach higher thresholds.
A 6 handle or something like that.
I have here the chart showing the unemployment rate now at 4.4%, the highest it's been since I think 2021. On the other hand, though, we're getting some volatility in the weekly.
And also, like if you look into this data a bit more granularity, you'll realize that like university grads, unemployment's like spiking really fast. So already up to like 10% or something. People are not able to find jobs out of school.
Sometimes they've beaten expectations, sometimes not. And so how do you explain rising unemployment with sometimes more jobs being added than expected?
Yeah, I mean, there's obviously, when we think about the unemployment rate, we have to think about the numerator and the denominator, right? It's not just labor market demand, but labor market supply. And one of the reasons why the unemployment rate has slowed or has maybe not gone up as much as some people were expecting is because you had an environment where labor supply was falling in a concomitant fashion with labor demand. Labor demand was falling because you were seeing non-farm payrolls slow down, new job additions slowing down, but labor supply was also falling because of immigration. And so some would argue that the unemployment rate if you had kept labor supply constant with immigration, you would have seen it move even higher. I think the pushback to that is, if the labor market was that much weaker underneath than what was maybe captured in some of the surface statistics, would we have not seen it in some consumption data? Would we have not seen it somewhere else in the economy show up? Now, it's very easy to push back on that and say, well, consumption data is just weighted to the highest income households. That we've all seen the stats, the top 10% of households generating 50% of consumption. So if there is weakness based on what you're seeing if there is more weakness with labor underneath the surface, and it may be being skewed by what goes on with consumption data. And some people will point to things
that's not
like,
true, right? That's not true. Like, you can, it's very clear that when you go look at like companies like McDonald's and whatnot during their earnings calls, they're all saying the same thing. Like, the lower end retail is not consuming nearly as much. So like, there's the definitive data on that. Also, like, same with the credit card statement data, corroborating that statement as well.
Apartment rents, as the deflation we're seeing in apartment rents as a sign of some of this labor market weakness starting to bubble up. But of course, there's supply and demand dynamics there. So we expect the pace of job additions to remain rather subdued. And one point on that is a lot of people are saying, oh, it must be AI is the reason why companies are employing less people. We don't think we'd see it in the data yet. Maybe at the margin, there's certain jobs that people are slowing the pace of new freshmen or like new graduate software engineers, for example. But we think that the reality is that the reason you're seeing slowing job additions and maybe some increased firing announcements is more to do with margins related to tariffs. And so because tariffs, as all the data is showing, are being borne by corporates, not all of it, but the majority of the tariff cost is being borne by corporates, they're looking for ways in order to defend their margins. And in order to defend their margins, they are looking to pull back on hiring, which is obviously a big cost and expense for a lot of individual companies. So the point being is that we think that the reason you've seen a slowdown in job additions and some weakness in the labor market is a function of what's going on within margins. And I love how the sun.
I was gonna say, like, is she getting the sun is like blinding her all of a sudden? What the hell is going on here?
Just as we're talking about yeah, maybe that is a harbinger for what's to come in 2026. Let's stay optimistic.
There's hope for us after all. Thank you for bringing out the sun, Cameron. We appreciate it. Let's talk about your positioning into 2026 and to end the conversation. Starting with Bitcoin now. This is an interesting chart you got here. Selling pressure is real. Bitcoin fades before it gets to resistance. You and I were chatting offline. You were telling me that one of the themes that you've noticed is the lack of conviction either way that you've observed, and it goes to show that Bitcoin falling has spooked a lot of investors who are risk on. At the same time, though, if you take a look at the Russell, it's been hitting new all-time highs, and in fact, it's been beating Bitcoin on a year-to-date basis. Let me just take a percentage scale year-to-date. Yeah, up 13%. Bitcoin still down 10%. So it's not a matter of people are just risk off overall. It's really just Bitcoin when you look at it.
Yeah, and I think that it's such an important observation, because one of the things that kept catching our eye as we went through September and October is you were seeing massive rallies in meme stocks and other speculative parts of the market. We wrote a piece that was called Chicken Fried that was talking about the big rallies that you were seeing in things like Korean fried chicken stocks because of a picture of Jensen Huang with eating fried chicken, and really as endemic of the degree of speculation that was in the market. But then just saying, if there's so much speculation in the market, why isn't crypto behaving? And maybe it was a function of liquidity around the edges growing tighter. I'm not an expert in this topic at all, but we do see this as a tip of the spear of liquidity and risk appetite. And so, a recovery in Bitcoin we would see as an overall bullish signal for kind of a risk-on type of market. But maybe it's just reflecting the fact that you're starting to see some more dispersion in returns. There's a lot of leverage within the Bitcoin and crypto ecosphere. And the thing I would note as well is that there's been a big buildup of leverage within retail accounts as well. One of the stats we've been following closely and continues to kind of raise an eyebrow is that over the last 6 months, you've seen a 40% increase in the FINRA margin loan balances. So those are margin loan balances for retail investors. And that is reflective of the degree of optimism that has re-entered markets, and certainly the strength that has been in markets coming off of the lows in April. So I think that one of the things—
Is there a chart for that? That's a pretty interesting chart too, right? Interesting. Yeah, quite the interest, really, or increase. Yeah, it's definitely a little alarming. We'll say that, right? Been increasing month over month for a year straight, aside from the tariff dump. Interesting.
Watch in 2026 is that where does this exuberance shake out? Clearly, it hasn't helped on the crypto ecosphere. And like I said, not an expert. I know that there's lots of dynamics around different whales and that type of thing happening, but we do see it as an important liquidity indicator and risk appetite indicator in the market.
Well, how low do you think interest rates could go next year? And I ask this because, like you brought up, liquidity is or has been proven to be a very important driver for Bitcoin and other risk assets.
I think it depends on how much the new Fed chair is able to bend the committee to his will. That if the new Fed chair comes out and says, I think that the neutral rate is lower, and let's use, not that Myron is being considered, but let's use Myron's 2% dot. I think the neutral rate is closer to 2%. It would take a lot of weakening in the labor market to likely convince the rest of the committee to get down to that level. So we've been using 3% as a placeholder, effectively to say, hey, that's the Fed's own forecast of what the neutral rate is and the median dot. So it wouldn't be surprising if you were to see them move towards that direction. But what's interesting is the market has them barely getting to 3% by the end of 2026. It won't take a lot more weakening within the labor market to get that pricing for when we get to 3% to be pulled forward. Yeah. And I think there's one observation here that's important, which is that the last 3 years, I would argue, maybe even longer, 3.5 years, the bond market has been always more dovish than what the Fed has been. If you go back to 2022, the summer of 2022, the bond market was starting to price in cuts starting in 2023. Of course, we still got rate hikes. You've seen the 2-year Fed funds curve inverted for a significant period of time. We had the deepest inversion since the great financial crisis. Effectively, the 2-year saying, hey, Fed, you're going to cut rates and you're going to cut them a lot based on where you are today. That's starting to close, meaning that the 2-year is still projecting rate cuts or expecting rate cuts, but is not nearly as dovish versus where the Fed is standing. And maybe that's one of the things that I mentioned, that Adam Parker is picking up on, is that maybe we're closer to the end of this cutting cycle than we are the beginning. I think that's easy to say after 175 basis points of cuts.
Well, let's see what happens with either one of the two Kevins. You have here a nice graphic summing up your sentiment here. Kevin, do your thing. Nice Home Alone reference, just in time for Christmas. Okay, so gold then. The fact that gold has been signaling, well, not signaling, I'll let you talk about what it's been signaling, but the fact that gold has been pressing higher, it says here on this chart, almost overbought again. What is it signaling? Last time several times throughout history, whenever gold and precious metals have rallied, it usually signals either a defensive play for investors overall, where higher inflation and or higher geopolitical tensions, if that hasn't happened already. And the fact that gold has pressed towards $4,000 and stayed there, and now we're at 4,400 and has consolidated around that range for quite some time, is that signaling a more risk-off play into 2026? Or are we seeing a paradigm in which gold and risk assets can be moving in tandem together?
Yeah, I think that one of the things that's been interesting is how much has gold become somewhat memeified itself, right? Where gold looks and traded a lot like other momentum stocks and meme stocks back in September and October. And so I think that there is an interesting assertion to make effectively that gold's risk profile has gotten riskier as we've seen this run. There's lots of anecdotes about different traders in both China and South Korea becoming much more involved in the gold market as well, potentially adding to some of this move. So you've certainly seen gold become, instead of that gold bugs who were buying, coins off commercials, becoming a little bit more of a trading asset on the retail side of things. I think it's fascinating to observe that gold's resilience has been just monumental this year. You have seen it get overbought multiple times.
Well, because there's massive buyers, right? China's hoarding gold like crazy, and apparently that's only what's on the books. It's not even reported what's off books. And same with Tether, right? Tether's been buying a shit ton of gold too. So it's like having like two Michael Saylors in Bitcoin, just constantly fucking buying, unloading clips on a regular basis.
condition, you can either go down in price or you can go sideways with time. And we've seen in both times we've had an overbought condition, effectively gold goes sideways. We've been calling it the Chuck Norris of assets, of like just when you think that gold is down, it comes back fighting, and it just seems to be invincible. And I would say is that it's done an incredible job at burning off these overbought conditions. If you were to look at something like a weekly RSI, so looking at the overbought signal on a longer term basis, it is incredibly overbought. And so it should not surprise anybody if we see gold consolidate. And maybe the driver of that could be a Fed that's just leaning slightly less dovish as we go into the next year. Also note that other central banks look to be nearing the end of their cutting cycles, which could have an influence on gold. And I really love the reminder that at RINMAC, that Jeff DeGraff put out, which is that when an asset doubles in less than 2 years, the probability of it going up significantly in year 3 falls pretty materially. And so I think that there's that aspect as well of just, know that you've had a huge run. It doesn't mean that it doesn't still give you exposure to trends like dollar debasement and fiscal dominance and all of that. But
yeah, it's still
when
going,
it moves
right?
as far in
Still going. Silver looks a lot more suspicious, though. That thing's going to be having a top year pretty soon, probably. Probably at 70, right? Somewhere in this range. Like oversold on every time frame, from like the daily down, even the weekly. Played it most of a runaway train. I don't know if it's as bad as gold though, or silver. Palladium. I guess it has been having quite the move, right? There's going to be a problem soon where no one will be willing to pay the spot price. Paper says for the actual metal. Is that true? I think they just buy it regardless, right? Kind of pass on the costs to like consumer down the pipeline. Usually how it goes. Yeah, it is quite the increase, right? If you're using silver for any kind of like manufacturing purposes, the price is like basically like doubled. A lot of places will only give you 10 under spot for silver already. Like you mean places that are buying like so like if I were to sell silver to somebody and that they're giving me 10 under spot, you mean? Because isn't that usually how it goes? And I've never worked at one of these like jeweler type places, for example. People like will like sell their metals to them. I think they usually try and like undercut you, right? Not usually. Because I've seen a lot of videos of people like essentially like bartering, and like the ones that are a bit more like aggressive about getting a good deal, that they'll get a good deal from the person buying it off them. Whereas people that like don't know what's going on, they'll be like, oh, not giving me the actual price, like whatever, and they just like sell it anyways. So that's kind of my impression of how that industry works. I've never tried to sell any metals, so I have no clue.
As fast as you have, it would be incredibly naive to think that you can't go down.
So
And I
let's
say
finish.
that after it just consolidated sideways once again.
Well, even Chuck Norris has to retire sometime, so we'll see when
Yeah.
this consolidation ends. Cameron, let's end the conversation with a quick rapid fire speed round. So let's begin. So value versus growth next year.
Ooh, you know what? Next year, I'm going to say, this is hard. I know you wanted this to be a speed fire, but it's going to be difficult because I think that they're going to jockey for position a lot. So
Yeah,
there's
go
going to
ahead.
be points where I'm right and I'm wrong all at once. Look, I think that I think that growth will still have the earnings. And so after this value rally that we have, if growth valuations get close, we consolidate further, I think it would be an opportunity to go into growth because growth earnings are still significantly stronger than what we're seeing in value.
Okay. Well, look, quick is all relative, so you can take as much time, as little time as you need. If you had to rotate out of tech, which sector would you go to?
Probably healthcare.
And DXY up or down next year?
Down.
Okay. And DM or emerging markets?
DM.
All right. And 10-year yield towards 4% or 5%?
Towards 5.
Okay.
Not
all
at
right.
5 though. I don't think it gets that far.
No. Okay. All right. And we've already talked about the Fed. Bitcoin above $100,000 or no?
Above. It's not that far away.
Yeah, and I'm not making this very difficult for you. And I think maybe just your highest conviction bull case asset. What would that be?
We run diversified portfolios.
Okay, all right. What are you overweight into 2026?
You know, I called myself this morning defiantly neutral. I think that there
Probably
are
like healthcare, right?
there's going to be lots of opportunities for volatility along the way, and what we always remind investors at this time of year, which is that it's not whether or not you experience volatility, it's what you do with it. And so at this point, it's really hard for me to say that I'm incredibly bullish equities with them trading at 22.5 times forward and expecting 14% earnings growth. But because of that setup, I'm probably going to get some great opportunities as the year progresses.
Okay. Any New Year's resolutions
Oh, man.
that you'd like to share with us?
Yeah.
It's so late for that.
I want to be
that
home
rotation.
more.
Okay.
Travel less. Yeah.
Travel less, be home more, and get more of that home cooking. All right. Well, we've all been there. We can all appreciate that. Thank you so much, Cameron, for your contributions.
Thank you, David.
This conversation and this year, I hope you have a Merry Christmas and Happy New Year. We'll see you in 2026.
Merry Christmas and Happy New Year to you as well.
And where can we follow you before we go?
You can find me on X at Cameron Dawson and on LinkedIn. Cameron Dawson CFA, I think is.
Interesting. Interesting charts from that interview. Kind of just put those in our back pocket. Yeah, what was that announcement today? What was it supposed to be, that Trump announcement? Let's see what we missed out on. It was just another nothing burger. Did they not make it yet?
Theodore Roosevelt, the Great White Fleet. You remember that? The Great White Fleet, to the legendary U.S. issuing big div.
Just got the AI to summarize this real quick, so I don't have to watch this crap for an hour. Announce construction of new battleships. Interesting. Understand. I thought that the U.S. had relatively new ships in the Navy, but apparently not. From 1994, that was the last. Is that really true? From 1994? Pretty old. Hypersonic weapons, electric railguns, and high-powered lasers. Interesting. Only thing I saw from that was that Trump said they're keeping the Venezuela oil. I'm like reading through the bullet points still. The United States is keeping the oil, and they might sell it or use it in the strategic reserve. Interesting. Being one of these countries must suck, right? You can't do shit. Like, whether you think it's right or wrong, you can't do shit. You gotta sit there and just fucking suck it up. Just so people don't forget about the US, right? Just do whatever the fuck they want. And you're not gonna say shit about it. Wonder how this didn't fall under piracy operations. Doesn't matter if it did. Even if it did, what's gonna happen? But then they also like claim that they're like sending oil to some like sanctioned country, like it was like going to Iran or something. I'm gonna read a bit more about this. Plus, like, I think like the European Union or whatever was also like confirming the same thing. But I read about this as well. Like these people were like yeah, okay, yeah. I'm reading it here now. Okay, there's like scheduled oil tankers that are supposed to like go through the ocean, right? But a lot of the ones that they're seizing or like have planned to seize or were targeting are part of like a shadow fleet where they weren't scheduled to be like delivering oil and whatnot, and they're alleged. Who knows if this is true or not? But apparently these have been moving oil towards Iran. True or not, I don't know.
Trading from the villa in Ibiza. Golden 10 shot up, no visa. Nah, cocktails mad sweet like a teaser. Woke up rich, now the view got deeper. Deeper.
Candle glow, sun on skin. Limit hit, yeah, the fib locked in. Poolside bag with a summer grin. Marcos trades, let the winds begin.
Interesting. That's just how the game goes, right? When you're in the world superpower, you're gonna do whatever you want, basically. Do whatever you want.
Trading from the villa in Ibiza. Golden 10 shot up, no visa. Cocktails mad sweet like a teaser. Woke up rich, now the view got deeper.
Bum 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 bum. This spooper is in the book. Goddamn. Time is it?
Chilling where the candles kiss. Golden pocket can't miss this bliss. Money moves in a sunrise mist. Math and vibes, what a mix. Trading from the villa in Ibiza.
I need to stand up. Goddamn.
Wrist stone cold, but the chart got fever. No chase, just plan that's cleaner. Marcos moves like a summer leader.
Marco got the levels mapped out, that's facts. Fibs on chart, I'm loading at the cracks. 6-6 tap, I double my stack. Ops all green, then it all went black. Golden bounce, price come dance. Hit that fib, now I'm in advance. Entry sweet like a late night text. Wit touch deep, now the chart say blessed. Golden bounce, hold and run. Math got me armed like I'm holding a drum. .618, the base for the kill. Stack gets bigger when the wit get real. I don't flinch, I don't blink when it hit. 702, I'm sitting in a pit. Trap line hidden, tag that price. Order get filled, chart looking nice. I might ladder from the 6-6 clean. Then that more down to 7-8 mean. Pull back with.
I didn't know Venezuela had the biggest proven oil reserve. Maybe they had a lot, but not the most.
Count these racks. Price touch once, ain't never come back. We don't chase, we placed in chill. Golden pocket, got that thrill. Golden bounce, price come dance. Hit that field, now
Interesting.
in advance. Entry sweet like a late night text. Wit touch deep, now the chart say blessed. Golden bounce, hold and run. Math got me armed like a.
I don't know if they have the capacity to harvest all of it, but
7-5 hit, I'm way too chill. Pull back, moving like you know my play. I'm just chilling, watch the tape.
I mean, like, I mean, realistically, the U.S. is not meddling in South America for no cartel, right? Because of fentanyl.
Price bounce off and then disappear. Marcos don't flinch, Marcos don't sweat. Big field hit, it ain't touched yet. Bad bitch with me, roll
Kind of a nice story to play along with, but
too bent with, come kissing that deep retrace. I just flipped that back to base. Golden bounce, price come dance. Hit that fib, now I'm in advance. Entry sweet like a late night text. Wit touch deep, now the chart say bless. Golden bounce, hold and run. Math got me armed like I'm holding a drum. 786, now the trap gon' steal. That feel was major, now watch me chill. Stack get fat when I play them zones. Fibs on point like I'm throwing stone. Golden pocket, luxury trap. They want vibes, I want math.
Marcos, you sure of that? Ha! Bottom in, baby. Now we dancing.
Unlike the light crude found in Saudi Arabia, which flows easily, Venezuela's oil is extra heavy crude. It's thick, like molasses or tar, often requiring heating or mixing with dilutants just to move through a pipeline. Because it's harder to pump and refine, it's much more expensive to produce Middle Eastern oil. Starting into the new year, you should do some market live streams. What's a market live stream? Like while the NY session is going, follow the play-by-play. Maybe, but probably not. Like during the day, I'm like trying to like do stuff like code whatever, or backtest whatever, or like get into like my own trades. And then once I'm in them, I'm not trying to sit here on like the 5 minutes, kind of like narrating like, all right, we've grabbed a single print at the golden pocket. Like divs are printing, order flow spiking, guys. Time to get into the long. The best way to pick up followers. Yeah, I'm not sure. Like I've always said, like the only reason I stream at night, like if I was dating somebody, then I would stream either A, one, I wouldn't stream, or B, I would stream during the day. But I wouldn't be like particularly interactive kind of thing. Like, yeah, I'd sit here and answer some questions and whatnot, but there'd be times where I'm just like ignoring the chat. Yeah, I've considered it before, right? Out of curiosity to see what the... I've never really done it. So I'm just... Purely out of curiosity, I'm curious what the metrics are like in like the daytime versus the evening. So I already know what the evening is, and I've done it for a while. So it would be interesting. Is there an easy way to time snap your live streams? Like for me to do it, or you? Like I know now Google has like this button thing. Let me share screen real quick. Open a random video. Oh my god, Lal, you would have hated this one video. This guy's the biggest bear I've ever listened to. This guy mentioned bubble, like I don't even know. Is this the video? The first comment I see is mentioning it too. That's funny. Like you can use this button, right? And then like I don't know, maybe you can ask it. What are the key timestamps to segment this video? This guy was I couldn't even finish watching. It's the gym. I'm like, I can't even listen to this. So maybe something like this works. Although it might be a little skewed with some of the more recent videos, because we've been like watching stuff on YouTube, right? So like it might like put timestamps for the shit that we're watching. Seems like everyone's on the same page. The thing is, I wouldn't have mind listening to the whole video, but he was so fucking hyper aggressive about it being a bubble, guaranteed to blow, that I'm like, okay, man, just I got it the first time. I don't need to repeat it 50 fucking times. That was just going off. The slow markets are saturated with futures traders. What are those slow markets? I'm watching YouTube streams all day. Oh, interesting. You're the one that mentioned that Top Step channel, right? Isn't there some quite a big controversy going on with that stuff? Apparently the people that like live stream on that channel are like just hella negative PNL. And also like their platform had some like massive issue, right? Seems to be the case when I listened to earlier today. Also, if you can somehow format your charts so the label of what thing they are is large enough to read. The label. This? I don't think you can change this. Whoops. It's tiny. I don't think you can change that. Also, like if you're full screen, you can see it, yeah? Because even if you go like full screen, I don't think it's like a huge difference. Yeah, it's like no diff. Like you can do this thing with the where's the watermark? But just like it seems obtrusive to me. You're already doing the hard part, spending the time streaming. Should focus on making your channel blow up. Yeah, but I don't really stream with the intention of being a streamer, just... I'm at my computer. Whether I was streaming or not, I was gonna be here anyways. Doing something related to trading, whether I'm like looking at charts, or like backtesting something, or like watching some video, whatever. I just figured, hey, let me turn on the stream, or start streaming. Lots of reasons. It's like just kind of just to practice speaking out loud now that I don't work at a job anymore. Also, people didn't fucking believe me, right? When I'm telling them I'm getting pixel perfect juice fucking trades on a regular basis, they didn't fucking believe me. So disrespectful. I have to turn them into math believers. boom. Yeah, like, there's lots I could do to make the channel grow, right? Probably put out videos, shorts. What else? The daytime thing is interesting. Maybe we'll give it a go. So I'm curious, just as like from a purely data perspective, I'm curious. And like logically, you probably do get more viewers when you think about it. 'Cause like right now, like everyone that's in Europe is like asleep. Whereas like when you stream at the New York Open, it's like all the Americans or North America is awake, plus like Europe. I guess logically makes sense. Motherfuckers have like 5,000 members. Paying $5 a month. $5 a month for what? On YouTube? Dude. Trade alerts, people pay 100 a month for. Fucking do it. Think you're cool as fuck. Thank you. So do I. I'm just kidding. You got a personality for this? You have to put things. Oh yeah, that too. The title too, actually. Now that you mention it, the title thing too. I always find it so funny when people find this channel, right? Because it's just so fucking random. Just a bunch of videos, every video just like a date. That's it. Especially earlier on, because there wasn't many people in the chat. Like, yeah, sure, it's the same as now, really, right? Like, I guess like the people have changed, but the rate really hasn't. But a lot of times I would be here doing literally nothing. Like, not nothing in the sense of like me not doing anything, more so like nothing in regards to the stream. Like I'm just like reading a textbook. The chart open. You have to put things in the title. I already read that. We can try, right? We can try it. Out of curiosity. But I also wonder, I feel like it'd get too chaotic at some point. There's like, I mean, I don't know how much a trading channel usually has in terms of live viewers. Eventually the chat seems to be overwhelming. If I get to the live tab, what the hell is the live tab? Oh, I see. Interesting. Yeah, but between what you're saying and what else? Like multi-platform streaming? Like stream to like this, stream to Twitch. What's the other one? TikTok. Probably TikTok's pretty good for actually for that kind of stuff. I mean, I've never tried it. I don't even have a TikTok account. But it seems like the discovery algorithm on there is pretty effective. Which is interesting. I mean, when you get more people in the chat, I have more things to respond to. What is that? Oh, we're breaking the low finally. Okay. Just look at the other live ones right now. I never even used the YouTube live tab. I'm surprised anyone like I guess it's just me. Guess it's just me. I've never liked the YouTube discovery. Like, it's not like Twitch or Kick where you gotta go on the website and you can go to like Arc Raiders or whatever, right? In like, some specific category. So it feels like it's hard to navigate. You have an X account for your YouTube. I have an X account, it's not for my YouTube, just some like random burner account I made when I first got into trading that I've just had ever since. I don't use it though, like not that I don't use it. I don't tweet on it, I just read. I have like 0 tweets. But that's another avenue that is true though. There is like the live streaming on X. People streaming the market do constantly. Do constantly what? Curious to look at this other one. 5. What? How do you guys find any streamers in here? I have like 2 YouTube accounts. I have like the one I'm streaming on, like this channel, and then I have like my other one, which I've always had. And when I go to the live section on either one of them, I don't see a single trading related video. Why did it even decide to even put this on my feed? What the hell is this? Interesting. I've always thought there's meant to be made in the creation of content. Bounce from live stream to live stream. What does that mean exactly? I don't know, YouTube is interesting. Oh, I can search while I'm in here? Oh, interesting. NQ. Wait, it's not live though. If I go to the live search. Am I on the wrong section? How does this work? Oh, there's even games on YouTube. What the hell? Interesting. Interesting. What a lie, or people who are constantly watching the market. I've had phones in all day while I'm working. I was listening to someone who's feeding me market info. Yeah, definitely a lot can be done. We'll say that. A lot that can be done. but the YouTube discoverability is interesting. We'll say that. 'Cause I think they structured the live, like, from what I've listened to and like some podcasts with people that work in that area of advertising. It seems like they structure it this way on purpose. Like they want the algorithm to be what gives people the discoverability, not someone going to like a specific section. Yeah, we can give it a go, right? Can give it a go. Yeah, because they're pushing people who they can run the most ads for. Yeah, I don't know if my channel is particularly eligible for that. Let me go look at this thing. Because the audience, like there's an audience button when you go to the make a video or like live stream. You have to pick, is it either made for kids or is it not? And if it's not made for kids, and I forgot what determines how to pick which one it is, but mine was like I'm supposed to put it as not made for kids, which means that certain features don't work. The number of videos is the main criteria. Oh, interesting. I don't know that. And over 200 now. Starting to get traction. Not sure. Not sure. I haven't looked at this data in a while, to be honest, actually. Oh, cool. They added Gemini into the YouTube dashboard, the analytics dashboard. Interesting. So we can ask it, right? How did viewers find my content? Let's see what it says. Browse features was the highest, 70%. Over the last 28 days. Interesting. You don't want your kids as large as an audience, doesn't matter. I don't supposed to. I think I would get in trouble if I did that. And I suspect that's why people have. I've been seeing a lot on X of people that make crypto content where their channels are getting like strikes or videos removed. I think that's the reason, because you're not supposed to be like having this content for kids. Are you good with Photoshop? No, I don't even have it. Not even like installed. But you can just use like ChatGPT or whatever, right? I'd imagine, or like some, maybe not ChatGPT specifically. I'm sure there's like some AI tool that you can kind of just get it to do whatever.
soft but real smooth. Wrist right, I don't lose light. Stop set tight like a dress all night. Map so clean it feel like flight. I don't
Boom,
get
boom, 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 boom.
wrist right. It's the glow up.
Just stop looking, by the way.
I don't need to prove. They go wild, I just stay smooth. 1 to 3 hit, now I'm in the groove. Keep it tight.
Pretty good at promoting because I throw shows and stuff. Should let me make you some banners and whatnot.
Manage risk, that's how I move. Keep it tight.
Banners for what?
I set that line, then let it juice. You chase green.
I have one, don't I?
Manage risk, that's all night.
Maybe not.
I don't lose light. Stop set tight like a dress all night. Mask so clean it feel like flight.
Find someone else's channel. Oh no, I don't. Interesting. Does everyone have that? Oh, they do. Interesting. Thought I had made one. Did I never upload it or something? Must have forgot. Picture that comes up for your channel isn't very flattering. Oh, with the 3D glasses or whatever. That's me. What more do you want? Getting blinded by this juice. Boom, 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 boom. What does everyone else have? Seems like most people have something along those lines. Or like a symbol kind of thing. A logo, I guess is the correct word.
Jumping early, a sun cool, body big, wig tight. Now I snipe that move just right. Ops impulsive, caught in traps. Me, I wait, then I snap. Time a tick, I don't twitch. Level hold, I'm getting rich. Just a few more minutes now. Wanna jump, don't do it now. Let it print.
Interesting.
We gliding on the tide. Wait for the 30. Hold up, don't rush and don't get dirty. Patience make it 30.
People are fickle creatures, gotta bop.
Wait for the 30. Hold up, don't rush and don't get dirty. Patience make it 30. Confirmation coming.
Thing is, I can, actually, let me look on the other YouTube. I'm curious now.
That's my go. No emotion, pure control. Marco's math. That's how I roll. When the 30 close, I shine. Hit my zone, perfect line.
I don't know if it's a huge difference. Like, look. Let me just screenshot this.
When the 30 close, I shine. Hit my zone, perfect line. No regrets, just the climb. This my trade, this my time.
God damn it, these dots. Whoops, that's way too big. More or less the same as shit, right? If anything, I'd argue mine's better. I think I should have gotten it. Palladium. Yeah, it was quite the setup. Like, I was already in other things, so I can't really say care too much. AI slop. I suspect it's probably pretty good nowadays, right? Yeah, if you want to try making something, I mean, no guarantee I'll use it. Or maybe I will, I don't know. It just depends on how it looks, I suppose. We'd have the AI judge for us. Because I did have somebody come in here, who was it? I think they're in the Discord still, actually.
Market came like glue. How you met? I knew what the math would do. All time high. Now they mad again. Candle breaking out. Price back on 10. Profit in the bag. Racks
Yeah, like someone just offered to make me thumbnails for all the videos. But then they never said anything, so I was like, whatever.
haters talking slick. Never cashing in. Pixel perfect touch. Then I win again. All time high. They can't pretend.
But I think that where's the dashboard? Where's this thing?
Talk, they stuck in drawdown. We lap y'all. Price break range. That's jackpot. I print on rate. They no back talk. Imaginary line still hitting on cue. Why they chasing hype? I'm chilling with you. Lambo dreams. That's my walkthrough. Chart look clean like it's dressed in new. All time high.
I think YouTube can like auto-generate thumbnails, if I recall correctly. They added the option. Yeah. Or some things that represent you. Things I don't know well that define you. For a banner, I don't think it's that serious, right? I just looked through. Seems like almost everyone's banner was the same thing. It's just like their channel name and then like whether it's like a website link or like links to their different socials.
Set the level, draw the zone, place the line. Price tap once, then it bounce right on time. I don't chase, I wait, let it come to me. Hit that TP like a shot from 3. Club lights flash straight locked in. Profit running like it's trying to win. I ain't emotional, I'm surgical. All my feels look vertical. He's so clean with the wrist control. PT 1, 2, 3.
Interesting.
Wanna dance while the charts unfold. That Marco's math hit different. Target like with precision.
That is a funny one. Art is subconscious. Oh, these people got it made by the same person, clearly, or something. Very, very similar.
TP get in touch like it's made for me. Math so tight, it obeys the key. Things love the flow, it's Fibonacci smooth. 6-6 tag, then we bust that move. Pushing profits like it's late night gas. Stop loss, break even, we moving fast. Winning like I'm wired to the plan. Every target hit, I don't need no chance. Hit that target, hit that line. Math in motion, perfect time. No emotion, just a grind.
Interesting. Seems like everyone is the same thing. It's just some if they have a logo for their channel, it's just their channel logo with the name of the channel and socials essentially. How do you even see this though? Because I don't think you see this on the phone app, right? Maybe you do. I've never even noticed these until like 2 minutes ago. Oh, you do see them on there actually. Interesting.
Hey, talking charts, talking facts, emotions. That's trash. Woo. It's Marcos. Let's
Interesting.
the math is the math.
You probably
Run this
to
pray for pumps.
took Meet Kevin's course.
The math is the math. Yo, edge ain't real, that risk.
Probably not. I mean, it's just pretty like.
I stacked and dashed. I said it before.
I mean, does YouTube give a guideline for what that's supposed to be? Or is that thing?
Tap out into bold. Stop loss tight, I'm in control. You over leverage, pay that toll. Risk per trade, I size that light. You size from hope, I size from right. Edge confirmed, I press at night. Wake up rich, you tweet your fight. No strategy, that's just noise.
Because YouTube even tells you on the thing.
Run that semi-ride with pull.
The banner image is to manage basic info about your YouTube channel, such as channel name and description, translations, and links.
Plan the path, you scalp that wick. The math is the math.
Kind of makes sense though, right? Because like, what are you gonna put like? I don't know. Like, for instance, if you ask me what do I like, and I tell you I don't know, cooking food. Like, are you gonna put like a fucking chef's kitchen and the banner of a trading channel? It doesn't really like make sense.
It's not emotion. It's not hype. It's numbers. You lost because you never knew what you were even doing. The math.
I'm sure you get it pretty cool made by the AI. I suspect that's what this person did. Also, how does this look on terms of? Lots of different ideas though, right? Probably write some of this down. Plus what else? Oh yeah. What else did we mention? Or something else, right? Oh yeah. Thing is that someone mentioned this before, the multi-streaming before. And I looked into it because I was gonna do it. But like all the softwares that enable it were like just these random open source softwares from like Lord knows where. And I was like, okay, I'm not gonna install that on my computer. Well, I'm like trading and accessing bank accounts and whatnot. But I don't trust it. It's kind of where I left that idea off the last time it was ever mentioned. Because there's a way to do it via OBS. But the problem is it doesn't aggregate the chats. So if I wanted to like A, have the chat on screen somehow, or B, just have the chat open in one spot for me to see, I couldn't. So I have to have like multiple different chat windows open for each one. Okay. Most of them are using multiple devices. Like one computer per streaming service? I don't know about that. And maybe, but seems unlikely, right? It seems pretty. Let's just ask this thing.
Marco's trade with a hat. Pepper look mad. I'm up 6 figs off a Farcoin bag. Yeah, let's go. Dog with hat, I'm waving the leash. Turn to a milli from nothing but means. Bonk hit a fib, I'm letting it squeeze. Chill got eyes, no stress, just bees. Dogs from $1 to dream. Farcoin fly that chart up sig. Pepper print them frogs got green. I'm top ticking these jokes unseen. Popcat scream when the tape go out. I'm deep in the net like a memmed out child. Don't need white papers, don't need trial. Just pixel frogs and degens pile. Bag too fat, wallet obese. Chart go up with 0 piece. Gas fee high, but the bag increase. Front run hype like I wrote the piece. Buy low with a gift on deck.
I think there's a couple of ways to go about doing it.
No pause, no sweat. Every pump I swing with tech. Dog whip hat, I'm waving the leash. Turn to a milli from nothing but means. Bonk hit a fib, I'm letting it squeeze. Chill got eyes, no stress, just bees.
They all have 3 cameras, a screen feed. I went to video processor.
I'm top ticking these jokes unseen. I don't chase, they chase that cat. Popcat moon, I just sat back.
I mean, according to this, it seems like there's a couple options. Like you can do it via OBS, like I was saying. But the only downside with that is that every stream... How do you draw this? Okay, like this is my computer. This is OBS. Like I'm connected to OBS, but then every stream I go to is like encoded again. So like this is like one stream to Twitch is like encoded, one to YouTube encoded, one to like Kick encoded. So each one is like adding that much more strain on your computer. Whereas the other option is where you like use some third-party service where you stream to that third-party platform and then they distribute it for you. I don't know, I have a pretty good computer. So I don't know if it'd be an issue to have multiple streams running on here. Maybe it is, I don't know, I never tried. Plus, I have like unlimited upload download bandwidth. Not bandwidth, but like I don't have like a monthly limit. Interesting. How many screens am I using? Like 4. Well, 3. I have 3. 3 in a laptop. But it depends. Because also, I have like I'm usually not in this room. During the day, I'm not in here. I have another setup elsewhere in my house with like a 57-inch curved screen. Which is like more effective than what I'm using in here. Like here I have 3 screens, but they're like 1440p. Whereas that thing is 8K. So I can fit like double the screen real estate of what I have right now, essentially. And have like another 57-inch back at home. The plan was to get both 57 inches in here and just stack them up. So I just haven't bothered to do it. Too lazy. The thing about this setup is like I haven't been playing games lately. But whenever I did play games, it was in here. I would not want to play a game on 57-inch. Boom, 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 boom. I have like a 300 hertz monitor. Got them 300 hertz on deck. Yo, I'm gonna stop by quick in like 20 minutes. I'm on my way to Barhaven. True. Just text me when you're here, because I can't hear I have like an ear infection. I can't hear through one of my ears. I might not like hear you at the door kind of thing. I was worried earlier today. I took like a nap earlier today, and I was like, man, hope it doesn't come while I'm like napping. Because I have to put like an eardrop in my ear, so I lay down and sleep. And since my other ear is the only one I can hear, and it's in the pillow, I can't hear anything. I'm like deaf. Sounds good. True. See you in a bit. Your herb plug. I mean, it could be, I suppose, could be, but no, it's not. Just like there's a couple people in the chat that come through once in a while that like they know me like in real life. Cool Guy is one of them. So it was like OG Miho. So was Drummer Boy. So same with Dan. Who else? There's one more, right? His name is Vinny. I forgot what his YouTube name is, but yeah, once in a while, people I know come in here. Bill. Thing is, no one I know like really knows that stream. Like a handful of people know. Because there's like no point, right? Like if they don't actually care about trading, it's like they're just not gonna care to watch. The gun should get relevant to them. I'm near Pittsburgh. I imagine that's a long haul. From where I am? How many is that for? So I have friends that go to the Pittsburgh game, like the NFL game. You know, like 12 hours away. Like normally I'm in Toronto a lot. I'm from Toronto. So like pretty relatively close to Pittsburgh. But right now I'm like further than that. Boom. We'll have to try this stuff out. No, the thing I really need to do, more than the only thing that I actually want to change on the YouTube channel, the only thing that I care about more than anything, is getting rid of the bar down here, like the Windows bar. I need to put like something down there. I tried to make it a scrolling ticker box, but didn't work as intended, and I was like, okay, whatever. I don't give a fuck. I don't care that much. To make it hide. Well, I can. I do have like a, what's it called? I can do like that. But then just like random block space, just like doing nothing. though. And it is a bit helpful. Sometimes when I'm during the stream, I can tell people like, oh, I did such and such at this time on stream. So I should go back to like when the system clock was that. Yeah, ideally something goes down there. That's not even bothered, right? Like, it's like, yeah, I have like ideas of stuff to do with the channel and whatnot, but at the end of the day, like, I never really planned to be a streamer per se, so it was like, not really a priority. Who's that one guy? But we'll add something there eventually. I'll give it some thought. Let me write that down actually. The thing that sucks about this stuff is that, like, suppose I wanted to like chill on the Christmas break and do some of this stuff. I don't have this computer with me. Like, I just leave this here when I'm gone. That's so tiny for me. Yeah, I suppose it depends how you're watching the stream. If you're like watching it on like a small window, then yeah, it's gonna be even smaller. But if you do like full screen, it should be 1440, I believe, right? With everything pretty clear. At least it seems that way when I go back and look at some of this stuff. Yeah. On a phone, seeing the clock would be impossible. Yeah. You can zoom in though on the phone, right? I'm pretty sure you can zoom in. Just go find the video to test. Yeah, you can zoom in on the phone. Yeah, but it's just blur. I think that's you. Change the quality in the video. I'm looking at it and it's crystal clear. Crystal clear. Dev, hello again. Let's lower it and see. Yeah, if you're on like 360p or something, you can't see it. But if you have a video on the actual like proper quality, it's visible.
Dreams. I let y'all pump, then I fade them schemes. Math been red like a set on flame. Stop hunt clean, who you think run game? Bugatti parked on Rosecrans Drive.
I'll just stop doing anyways.
But the wrist on ice. Ops go long, we laughing back. Got 'em
My laptop's about to die. God damn. God damn. It's about to die right now. Holy shit.
Treetop faders, catching that top. You long too early, we letting you drop. You jumping green, we loading them shots. Market ain't gangster, but math get high. Treetop faders, catching that top. You long too early, we letting you drop. You jumping green, we loading them shots. Market ain't gangster, but math get high. You say breakout, we say bait. You running fast, we lay that plate. SL hit, that's chain reaction. You bought fake highs, we fade with passion. B-chain swing when the field get placed. Double R drift like it's past your pace. You beg for trend, we pray for range. And bleed the top like a Pyru name. She asked why red, I said that's clean. Red Rari deep like treetop lean. Back this red, but the profit's green. B on my belt, but the charts stay mean. Treetop faders, catching that top. You long too early.
I'm on 240p. It's probably the best for the data. Yeah. Yeah, if you're on data, I wouldn't suggest watching on 1440p unless you have unlimited data. But yeah, it'd be pretty hard to look at this stuff from like a mobile unless you're zooming in. This thing restart already? God damn. God damn. What do you think we should do, Dev? We're having a powwow of making our channel go viral. Well, I'm not really a powwow. I didn't mention it, but oh, it's back. And spam it on stock twits. I've never used it. Like, I'm familiar with it. Because someone mentioned that to me at my work. Like when I first started trading, I was still working there. I think I was like, oh yeah, you should go on stock twits or whatever. To be honest, I think that the biggest difference, well, probably a handful of them, probably a lot actually. I mean, obviously there's a lot. But I suspect the biggest of differences would be one, having more videos in terms of the channel itself, and then in terms of the stream, the time zone thing is probably the biggest thing, and like stream titles perhaps plays in there somewhere. But at least based off the current data of this channel, the videos get the most subscribers by far. Not even close. Reading chat, all caught up now. My powwow was good. Things internet cut up because it cut off unexpectedly. What do you guys do exactly?
zone exacto. Golden pocket body perfecto. She pulled back deep like retroceso. Then ride that wave sin pretexto. Cadera mueve como price and trend. Bounce down clean Fibonacci bend. She dip like algo, grip like pen. And that entry click we send. No defeat, she ride my line. I match her rate. She don't chase green. She make it bait.
Bunch of people throw stock picks out when he analyzes them. Like as in the chart, or like fundamental analysis of their balance sheet and whatnot. Standing up for stock twits. I remember some girl in October told me to go on fucking, what was it called? Something Bloom. We were talking about this on stocks on chat recently. Or Blossom, I think it was. Blossom. Yeah, Blossom. That girl was something else, we'll say that. We'll say that. You see what FJet did today? No, I did not. One of the cleanest all-day runners. Starfighter's space. What the hell is that? A pretty strong trender. 100 EMA is pretty. I think you mean the 10 or something. I don't think you meant 100, right? I suspect you meant 10. Options chain analysis. On the 1 minute. Oh yeah, it's true. I'm not on the 1 minute. But even then though, like, I was gonna say that was pretty like strong trend, right? Yeah, pretty strong, pretty strong. Pretty strong. What is this? Actually, out of curiosity. A pretty interesting one, right? What, 64, 690 calls for tomorrow. We'll see how the market opens, I guess. I think there's a bunch of gaps below right now. There's a little sus. Which kind of left like it's like 3 gaps in a row. A little alarming. But we can keep loading up. Nice. Nice.
It's
It was a Reg A IPO a few days ago. Space company that may have run off sympathy to Sudo, which is running pre-market as well. No, I don't know if I would say it was like the sympathy play, because right now like that is a pretty big trending. Oh, this thing had a crazy pump too. Wow, nice little pump and dump. But like, no, like yesterday we were going through some of these like space stocks, and yeah, a lot of them were looking pretty crazy, right? And that's definitely like a pretty hot narrative last few weeks. Oh, interestingly enough, this data centers in space, not as straightforward as I thought it was. You need a lot of space-specific equipment to get them running properly. What's the point of StockTwits? I never use it, I'm not sure. But I think it's supposed to be just like a Twitter that's like finance specific. Also got filled in a phantom candle. What is a phantom candle? Do a phantom print, a dark pool trade at a price not recently traded on public exchanges. Not sure if that's the same thing, but what Google said. Might be wrong. I think StockTwits is more influential 4 or 5 years ago. Twitter now actually really taking its place. That's 30-minute candles. Okay. Not sure. I've never used StockTwits. I kind of just figured X was the most popular. Or like the other way I imagine it is that I thought there's many people who use StockTwit and not X. Like I suspect most use both. Or they're just on Twitter. I've never actually used it, I don't know. The Blossom one seems a lot more interesting. I mean, I've never used StockTwits, so I don't know what features they have. But the one that this girl was telling me about seems pretty interesting. Because essentially you can have like a portfolio on there for everyone to see. And they can track like how you're doing, and pretty interesting, right? I don't know how active it is though. People will start copying my 6 strategy. I just don't see that like the point in this stuff, honestly. It's like come on, I gotta be back.
I move with will. I'm floating above them. That
wop thrill. I trap they stops, then I press for the kill. They draw fake zones, I been in the field. They team look shook, I just broke they shield.
She don't move off vibes now. She move off Fibonacci. Golden pocket, baby, come ride the retrace with me. Oh. I see you watching from the 0.5, but I know you want that deeper dive. I don't just move for any touch, but baby, you rate me just enough. You wait for pullbacks, I love that pace. You trace my curves like a fairy trace. I drop it low, right on the zone. That golden pocket, I call it home. I drop it low, on the golden pocket. Marco's fix, you know I won't stop it. Bounce back slow, let you time that rocket. We ride the wave and we never lost it. I dip you grip, yeah, you always lock it. Roll 680, girl, I had to clock it. Wrist so tight, but the move so profit. Golden love in a golden pocket, yeah. I don't chase moves, I let them breathe. But you retrace like the air I need. Body aligned like fit precision. You hit that level, I make decisions. Confluence, hips and candles match. You signal clean, I strike the patch. EMA flow, girl, you trend so mean. And you bounce like you know what the market means. Back test my love, it's proven stats. You read my mood like you read those graphs. I don't fake breaks, I stay legit. You don't get caught, you time to dip. You my zone, my setup clean. Scaling slow, then let it steam. Pull me in with that deep precision. Your body's math and I trust the vision. I drop it low, on the golden pocket. White goes back, fix, you know I won't stop it. Bounce back slow, let you time that rocket. We ride the wave and we never lost it. I dip you grip, yeah, you always lock it. A pause 16, girl, I had to clock it. Wrist so tight, but the move so profit. Golden love in the golden pocket, yeah. You don't chase highs, you wait to give. You don't short love, you let it live. We trade and sync, we move with grace. Golden pocket, our favorite place.
It's Marcos. You feel that? That's your liquidation. Got him.
I don't guess, I don't pray, I do math. Golden pocket entry, run it back. Top long, but I'm sure that's
Okay,
your
we're
path.
back.
Meanwhile, I print yachts off your ref.
Look, we got a 3D printed. Look, can you guys even see this thing? Look at this. It's so delayed, I can't see yet. It's a 3D printed Bitcoin bull. Oh shit, I almost dropped it. That is funny. Oh, let's get caught up here. I believe Atlas uses stock codes to pump their plays, but then they get sued. Who's Atlas? Sounds something sue-worthy though. Stock twits, main advantage is it's separated by ticker. If you see a move, you can check the stock to see why. But at the same time, people on X just kind of put hashtag, or like they put the ticker as well in the tweet. Kind of just filter it that way as well. Do you print that yourself? No, my friend just gave me it like 2 minutes ago. Like I had given him a book to read, and he just was dropping it off on his way past my house. And then he gave me that as like a little gift. So apparently he just got a 3D printer. They're pretty cool. 3D printers are pretty cool. There's a constant feed on each ticker. Brother runs a 3D printing business. Like he prints stuff for other people that don't have a 3D printer, I guess. The thing about this, like that's what I was gonna say before I left. How do you say this? Okay, first of all, everyone has like some strategy that they're running, or some kind of like portfolio they're running, so on and so forth. So like you being on there exposing yourself to like a million different ideas is just gonna confuse you. And if you're just like copying someone else without knowing what's going on, it's incredibly risky. And also most likely to fuck shit up. Like if someone's copying my portfolio, for example, and like I have like a bunch of Tesla, and because I have a conviction in like the long-term plan of that company, whereas like someone else just buys Tesla because I have it in my portfolio, and then one day Tesla has like 30% drawdown from where they bought it, and they just like sell it at a huge loss, whereas I bought it from like way lower, so even with the drawdown I'm in profit. And even if I had bought it at the highs, I wouldn't be selling it because it's like a long-term play. So Atlas Trading Group, Mr. Zach Morris was the main handle. He's relentlessly pump. Need stocks on StockTwits. I mean, if it worked, it worked. Fuck it, right? Fuck it. I think people do that now on Twitter, right? Like, what's that one clown? With the gaming altcoin guy? What was his name? He was like big on YouTube. Oh yeah, is that Alex Becker, right? Man, that guy was shilling garbage, pump and dump garbage non-stop. I bet if we go look at those charts right now, they're probably all like literally just... They got in trouble because they said they're holding the position, and meanwhile it would dump on the ticker word pop 2-3 cents. That million shares, these crappy pennies. And yeah, usually how the grift goes, right? But like, who do they get in trouble by is what I'm curious. Because the thing about these crypto people is like they're just like off in fucking some foreign land, right? Just scams, and the market's not regulated by like any body. You know, as much as people want to give that Gary Gensler guy shit for the way that he was operating the SEC and whatnot, he was doing in the best interest of everyone, right? Because the amount of grifting and non-stop garbage that happens in crypto is unfucking believable. Bum, bum, bum. Yeah, I would not be aiming to pump in dumb stocks on like any kind of regulated American market, right? Just like asking for trouble. Unless you plan to escape to some country with like no extradition and never leave. The SEC came down on their ass, and the DOJ. Damn, that's no joke. Did they go to jail? I suspect so, or maybe he had like a huge fine. I don't know. Also, like, could you weasel your way out of the argument of that? Like, think about it. Oh, I bought X stock because I have conviction it's like a good company. I mention it, and then the price goes up, and then I just sell it because I got the gains I wanted and locked them in. Pretty hard to argue though. Apparently some whale has like $243 million short position on StockTwits. I mean, like, there's always huge positions like that open. Also, like, doesn't mean anything, right? Like, if anything, like, they can just be doing like a basis trade or hedging their spot bag. Not particularly insightful. Like Roaring Kitty. Yeah, I wasn't around trading when that whole GameStop thing happened, so I'm not really sure what was going on with that. I don't think that was like a pump and dump per se, right? Wasn't it just kind of just like a targeted like gamma squeeze? Like the entire community came together. Ultimately, charges didn't stick. Damn. They got away with it. That's funny. That's the thing. You could like kind of like smart talk your way out of it per se, right? Like obviously, like most people would know that you're fucking bullshitting. But but like based on just the logical sequencing of how you did things, you could argue it. Like, yeah, I bought the stock because I believed in it, and well, you want me to not sell it when it goes up? Am I just supposed to hold it forever until it goes to zero? Obviously, I'm gonna take profit on it. bum, bum, bum. Where is this thing? Ryan Katie said, I like the stock, we need to testify. But like he did, I mean, didn't he technically, I mean, he did technically like it though, right? Didn't he just think the company was undervalued? Something along those lines? I don't know what the whole story like was. It at the time, was it undervalued, or was it literally like they just saw that there was like incredibly mispositioned by these people? You know, like because of the active float at the time, they knew if they all bought it, they'd cause them like huge unwind to the upside. I don't know what the exact history of that thing was. Short interest was like over 100. It makes sense that that company was, and it still is, somewhat cooked, right? Like, what does GameStop even do now? So I think most of them are closed. At least here, like the ones that I used to see around here, they're all closed. Also, I don't see the short that you're talking about on Hyperliquid. Well, I guess that couldn't, not on Hyperliquid, right? It could be anywhere. Like, where is that position open? There are also trading groups dedicated to GME/AMC. Talk about synthetic shares all day and how the next short squeeze just around the corner. I don't know if that would happen again, right? Seems like most like hedge funds now account for that scenario in their risk management. Because it was like a pretty egregious scenario, right? How is AMC doing? Isn't that stock like tanking? I saw that thing like trending earlier today on. Just put this on monthly log mode. Yeah, but from what I've seen with like interviews with like fund managers and whatnot, it seems like no one kind of leaves themselves exposed to that situation happening again. I'd imagine there's a lot of bag holders though in that, right? Almost certainly there is. Do you trade using log? No, I just use it for like charts like that where you can't see what the hell's going on. Like sometimes I'll look at on the higher time frames, like when I'm looking at like a high time frame trend. But that's just like a pain in the ass because then you have to like go and like switch your fib to like log mode, or it's just like you have to put like log mode and switch it back afterwards, blah blah blah. Like I think most people use it just when they're doing like high time frame analysis of stuff. Or even when you have a case like this AMC chart where you can't even see what the hell's going on. Like when the chart's looking like this, like you can't tell what the fuck's happening here. There's thousands of stocks that could happen. Do a free tilt like interest. I suspect. I mean, I haven't looked at them. I'd have to obviously go look at all of them individually, but I don't think so. I don't think so.
Broker store, they can't feel mine, so they widen spreads and delay time. News don't move it, tweets don't phase. It's Marco's trades that bend the wave. Fake outs live where I place bait. Whole trend shifts off risk I rate. Top gets squeezed while I sell calm. Your moon is my exit, thanks for the palm. Golden zone, that's my canvas. You chart hope, I move like an atlas. Leverage max, that's harvest season. They get got and don't know the reason.
You say it's luck, but I've seen this loop. You caught the spike, I wrote the scoop. Your stops find suits. I'm my next booth. You trade belief, I execute truth.
Limits, pivots, this ain't a guess.
Like it's something that like they all account for now, right? My thought is it doesn't hurt to always trade and log for tickers with a more stable range. To mess with the indicators. No, it just makes like the percentages like balanced out, right? Like 100% back here to here is like very different than 100% here to here. But when you're using log, it's like 100% here is the same as 100% in this area. So it's like the consistent percentage moves up and down. But in terms of like indicators are derived by like price action, no, it should make a difference, right? It's like it keeps the gains like the gains or losses like on a relative scale, regardless of how much the stock has gone up or down. Well, maybe, I don't know. I can't say I've ever said you're trading on the log because I'm thinking on lower time frames, not really a big difference, right? You're just putting log on and off is like no diff. Maybe there's something to be derived from there. I wouldn't spend a whole. Maybe you can do a big nerd out on it. I don't know how to be particularly bountiful.
How you know the bounce like that? Because the fib don't lie. And what if I test that level? Then I'll buy the dip every time. The mat is the mat, and we don't miss. It's too easy when you do it right. Math so clean it turned dark to light. It's too easy when you know the vibe. One retrace and we both align. It's too easy when you study deep. No
Probably it could be useful for like small caps. Kind of makes sense too, right? Given how volatile they are and the stuff that we were looking at earlier that you had mentioned. Doesn't make sense, right? Because the percentage moves are much larger. But like, as the logic checks out. Interesting.
How you know the bounce like that? Because the fib don't lie. And what if I test that level? Then I'll buy the dip.
What was the one ticker you mentioned? It's got to look at it out of curiosity. FJet. What about in the 1 minute? Maybe. I don't know if there's gonna be like a huge difference, to be honest. Even with this like low cap stuff. Yeah, just within the past 2 weeks, I started trading log. For me, I watched so many highly diluted tickers. I finally realized I could have found levers much quicker on log scale. Yeah, sure. I guess I didn't give that much thought in terms of going back and finding like previous levels. Didn't go back. Well, that chart didn't have any anyways, but trend lines definitely change. Yeah, they do. Like on this chart. Like this channel is gonna be like completely different if I swap it. Like no longer touching anything. But a lot of times when people like are doing log mode on this higher time frame stuff, they use like the curve, right? Like this thing. Trend line from SPY 1985 to now, you lose log. I'm not sure which trend line you're referring to, but
Marcos, lights low, charts glow, load in the air, my thing control.
it's 11:30. Be time for a juice box and get out of here. Never even ate. God damn, I got a pack still too. God damn. God damn.
Stop loss, clean that edge, be prime. You trade emotion, I trade design. Them want vibes, I want fit. Them want pump, I want grit. Them buy high, I flip it. Now them stops get slit.
Although it's not gonna be a particularly interesting one. Like literally nothing. We're basically right exactly where we were yesterday when we did it. we came and got the purple line from earlier that was up here. If you click that short, you're probably still in this thing chilling. Other than that, nothing has changed. Literally nothing has changed. Well, I'm curious how much that red box got. Yeah, still a lot of it's still there. I think there's a huge options expiry next week. I think it's like I think it might be one of the biggest options expiries we've had. We'll look at this later, but yeah, from what I was reading, I mean, I wasn't paying too much attention to it. Can't say I care too much about with the expiry on this. I'm not gonna be touching these things regardless. But it seems like there's a pretty massive like gamma wall up here, right? And another one at 85. That's why we kind of just been ding-donging back and forth in the same two spots. I mean, from the expiries I'm looking at right now, seems to be the case. Keep that in mind. In terms of this other data, I don't think anything has changed in the lower time frame with these like lower levels, right? Not really.
Tap the line, no guessing. Chart so clean, it's a weapon. You buy hype, I'm testing. You chase green, I'm resting.
Anyways.
Body count high in the order book. One tap fade didn't even look. Lemon fills get snatched like crooks. Stop hunts cook, just read the hooks.
Actually, before I do this, let me look at the open interest real quick. Make sure we don't miss anything particularly interesting going on.
Late night clicks in silence. Price talk back in violence. I drew that line in science. Now you pay that math compliance.
Interesting. This isn't a real gap. This is like the contract rollover, so I ignore that. Either way, they already got filled regardless, but... Alright, friends, Mo, good night. Talk to you all later. And I'm about to head off as well. I'm shooting this juice box, then I'm out of here. I'm just thinking. But there's a big gap below on RTH, right? If we filled today's, there's still like another gap below. Quite likely we are going to be sweeping these like weekend lows, right? Quite likely. One thing I'll say is like for whatever reason, if we hold here, like right here in this cluster of price action, a lot of longs open here, and a lot of shorts. So if for whatever reason we start to like flip this level and reclaim the value area low, that's probably going to be the long, right? Like the only different long that we didn't talk about yesterday. Like obviously we talked about cleaning this stuff, cleaning this, like this, so on and so forth. Like none of that, any of that has changed. But there's a world where like these shorts start to get squeezed out if we can flip that level. But right now all the longs here are underwater, and there's a bunch of longs that open on this move up that haven't closed out yet. And like this sweep on this wick didn't get them. So like their stops like here or like lower, right? So it seems like we're going to be coming to get this zone pretty soon. Unless order flow starts to like just flip out of nowhere. And the reason I'm mentioning that there's like a chance we do this, but there's a bunch of like CBD bull dips printing here. On like Binance SPA and on like perps for like the coin margin contracts. So... potential, right? Maybe we come just clean this high first and then start going down. Also, yesterday's taking point of control too, right? I should mark that thing out. Or just say like a bullish retest of the PD value low. And the thing about this though, I don't even know if that'd be even the greatest idea, right? Because there's like a pretty realistic world where even if we do end up pulling this right now for whatever reason, I might just end up doing that. So like whatever, you have this option, you keep it in mind. Like the safer run would be if we start to actually like go from here, right? And then like flip this zone and then come finish this crap, if not higher. Although again, a little bit suspicious that we're gonna go past this given the kind of gamma wall we were just talking about a few minutes ago. Oh, well, Boy kind of just mentioned them both, right? Kind of flipping this like 89-2 zone. Actually, golden pocket. And like the higher time frame stuff that we talked about yesterday. Our time frame plans haven't changed. So all these lower levels plus like the flipping of this zone on the higher time frame. Like and like the 91 that we were talking about yesterday is like still the same story there. For a short, a little tricky, right? At this point, you're late. We had talked about this short for a while, so if we took it, nice. And for anyone that's like coming late, we kind of talked about this to start the stream, right? But you could have taken this many ways, right? They had multiple opportunities here. Whether you had like the limit here, whether you took the swing fail pattern on this candle, whether you took the failed auction up here, whether you took the retest with the fib on this thing. There's like multiple times you could have gotten into this trade. So yeah, a little bit late at this point. Boom, 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 boom. There's a world where we just kind of come here and tap this, right? I feel like the risk reward doesn't make too much sense chasing right now. Probably be this, right? Kind of like clean, like we kind of squeeze out the positions that were in here on the short side because there's not that many either. It's not just like some like huge amount of shorts here. It'd be like a little baby squeeze. Kind of just like stop them all out, like 3A2 / naked point of control kind of zone. Be at top of this like volume node, and then continue lower. Maybe you come to the Valley Area high. Kind of just keep those two in mind. Like that 3A2 4 high / naked point of control. Or the PD Valley Area high. A little risky though. The little risky. And from below, we talked about this stuff yesterday, right? Like the retest of like this region or down here. So no real difference there. I just deleted the box down. The reason I say it like the value high is because like this rotation, right? If we like reclaim, because we opened inside and then we came out below. So we do end up like reclaiming it, then not the typical outside day setup. So the probability is not going to be as high in terms of just the actual math, but and the high time frame stuff, right? High time frame plans haven't changed. I should do it, yeah. So we covered a lot of this stuff more in depth yesterday, and nothing's really changed. We're kind of right back to where we were when we got off. So not really too much to go in depth on here. I'll get rid of this Bang, get rid of this. Bang. And yeah, interesting times, right? Interesting times. We've basically been streaming for a year. Like it's the 1 year anniversary of the YouTube channel. Like that YouTube gave me a notification today. So we've seen a lot of shit, right? That talks about the first thing we ever talked about was this zone getting got. Then we talked about the bull trap. Then we weren't streaming for a while. And we came back here. We traded all this on stream. Until when? Until like a year, right? So we've seen a lot of shit. And now we've seen all this, right? This whole move back down. When did we come back? Like around here, right? So we've seen a lot of shit. A lot has changed over the year too, right? Alter the strategy a bit, change up our charts, start using some different indicators, start collecting some different data. Yeah, damn. Time flies, time fucking flies, tell you that much. Let's do a quick chat shout out. Scroll. Shout out to Dev. Shout out to Lyle. Shout out to Harris Cabal. Shout out to Cool Guy. Literally fucking attacked me at my house. Gave me a pretty printed bull. Shout out to NASCAR All Out. I think that was it, right? I think that was it. Yeah, in terms of stream, this is the last stream for a while. In terms of when I come back, I don't know yet. I have to be back here in February, so that'll be the latest. Well, I'll be back before then. I don't know. Maybe, maybe not. It's up in the air right now. Because there's no set dates. I can't give an answer. Ideally, we do come back a little early. If I don't, so be it. It is what it is. Either way, we'll be in the Discord. We'll definitely be posting back to the usual Discord updates regularly. The daily Discord posts. Also some stuff to kind of go research for the stream. So maybe we'll have some kind of upgrades going on next year. Yeah, overall pretty good year, right? Looking back, overall, I think we traded this pretty fucking good, right? Pretty good. Well, on to the next year, though. This is now in the past. And in terms of the updates, I don't know if I'm going to be posting too much like during Christmas time, like Christmas, Boxing Day, New Year's. There's probably not going to be much going on. Like if there is, yeah, I'll kind of be checking in and whatnot. But if we're just sitting here, I'm not going to be really thinking to update on. I'm not like going to be scalping myself. So don't be expecting like low time frame scalp updates right away. But if I squeeze them in, I'll squeeze it in. Not, you mad or not? Yeah, we're out of here. We're out of here. We'll be back again soon. Until then, hope everybody has an amazing Christmas, an amazing Happy New Year. Stay safe. Don't get got in real life or in the markets. We will be back soon. Till then, later. Later.